Good morning. Can you hear me? I was just talking to myself yet again until somebody said no sound. Okay. And you didn't hear my rant? I was literally ranting. Did you hear it? No? Oh, you missed it. All right. Good morning. This is Rose, September 30th, Friday, 3 minutes after 9 o'clock. The session is recorded. Maybe I should take this as a sign and not rant. It's Friday after all. I was ranting about the ever-changing world's geography, and Russian just expanded their their borders. They have brand new map now. I don't even know, should I be laughing at it? I mean, how is this not stopping me from grabbing, my neighbor's land? I've been thinking about this all night. I could just go invade my neighbor's property and just do a land grab, on a Friday. I mean, what are they going to do? They have two little pugs. They can't fight me. Those things just bark. They don't bite. And I'm thinking I could fight them with rotten tomatoes, drop a couple of eggplants if I needed to. But what is it, to stop me from, or my neighbor to grab my land? I mean, is this the world that we're living in now? Anyone can grab anybody's land and just expand their borders. And I don't know. It's not a good Friday for many people who have lost their lives, and it makes everybody nervous. I don't know. Markets are reacting, and we have ton of, on the U.S. side, we have ton of Feds are speaking today, so you guys need to be super careful. If you don't feel like, I don't feel well today. I really don't. Physically, I don't feel well. Mentally, I don't feel well. But I'm going to soldier on, and probably I'm not going to trade today, and because today is ridiculously jam-packed. I'm thinking maybe after 10 o'clock, which is the consumer sentiment, I might just take a trade or two, and just gonna, take it easy this morning because of the news. Thomas Parkin, Brainard has been talking about rates again, and so it's not a good situation. It's before the market opened. Then you have Chicago PMI. Chicago PMI is kind of important. You guys need to pay attention to that. That comes out 9:45. Consumer sentiment at 10 o'clock. Then Thomas Parkin comes out, and I mean, it's just all the way to the close. We have ton of speakers. So, all right. So far, we are sideways overnight. Some kind of a expanding triangle here. Market is bearish. You can see the overall bias is bearish. And you see we have two legs here, leg one, leg two. Bulls might be wanting to get a leg three. Okay. So are they looking to, buy low? I don't know, but we are at the moment selling towards the Globex low. So if we do break the Globex low, we're probably going to come down to these lows and test these lows. Now, be careful. Bears can break these lows once again, and that could bring us very quickly 35, 80, 35, 60 area, like this area. Okay? So just watch out. All right? Let's see what happens at the midnight open. It held earlier. But they're coming in pretty strong here. So let's see what happens. But seriously, guys, when you get that feeling, the jittery feeling, and or you just don't feel like, maybe this isn't a good day to trade, just listen to that voice and don't trade. Just step aside, When you see something good sets up, trade that. So today is, yep, Rambo's right, end of week, end of month, and major, expect major moves on these on the chart. Okay, so we could go up and then come down. We could come down and then reverse and go up. So we could get two large swing trades. I just want you guys to be extra careful today. But just to go through the monthly chart here, I'm still holding on to that measured move target. But that moving average, same, we've tested my area of interest, okay? We could continue to come down. Now, on the daily, June 17, June lows, we breached it, but we don't have a strong bear body below that. So if we do break it, we could continue to come down at least to, I'm thinking maybe 3,500 area. We could briefly, just get there very quickly. Not, we may not hang on there too much, but we could also reverse if we do get there. So Globex low, we're trying to make a new Globex lows before the open, so I'm gonna have to adjust that if that happens. All right, so let's see. We had a huge 8:30 news. First, the bar actually went up, and then came down. So you can see this is all news. Remember, when you have a huge bear bar and market is going, expect another test of that, and that's what we're doing right now. When we have a huge bear bar or huge leg, market is coming down, expect to go back up again. So it's on the smaller time frame, and that's what we're doing. Okay, so there's a wedge here, 1, 2, 3. There was a wedge here, 1, 2, 3. So we're in a channel here. There might be maybe some buyers here, I don't know, but if we do break it, this is still that chart that I posted. Okay, you see this area now is an important area. Okay, so we are oscillating around this area. Hang on a minute, I'm gonna select that. Okay, here we go. We're not staying underneath too much, but we do have maybe a complex head and shoulders might be building here for bears. The problem is that there's a huge void space. Now, we've tested at this level, so this level might act as support again, but bears are trying to break this level, okay? Why? Look, they tried to break once, they tried to break twice, they failed. Created the structure. If we break, this is where we end up going, okay? So this price point. But we are oscillating around here, so market is making a decision. So if you look at this projected target, I marked the projected target here. We kind of met that. I never moved these the arrows. So look at it. We actually did test that. So that was actually 2. We over breached it a little bit because there's a gap area. Buyers did show up. So I'm looking to see what the market is going to do here. Is it going to break this time? Or are we going to make another double bottom and then go back up? So basically, impulse move down. And maybe 1, 2, 3, 4, 5. So that's 1, 2, 3 wedge. From that to that, this becomes the target, projected target. So it kind of aligns well. If bears start to sell, we could end up coming down to 36, 13 area maybe. First here and then break of here. It's possible, but I'm watching right now in this area. Now, let's talk yesterday. First 2 bars are strong bars and strong bear bars, both closing on their lows, meaning trend from the open. You get a bear trend from the open. Expect continuation, and the bars are gapping, right? So when you see something like this, see these bars are gapping. Stop goes there. That was your 1-to-1. Now, can I get 2-to-1? You can. and that was the 2-to-1. So that's your first sell right there. You see just a single one bull bar. You can sell around the wick. This is where I like to sell around the wick, or I put a sell order right there with a sell stop, and I get filled and I sell. And more bar gapping, so I'm expecting another flag perhaps, and there was one right here. And I was really looking for a wedge setup here, and we kind of got it, but it wasn't really clear, so it ended up being, but if you go to a 3-minute or 2-minute chart, you're going to see a clear wedge setup like this, and a double bottom and then go. So this right here is your third leg down, basically, that bar. It's bar 13. Then we have a double bottom. So the bears try to sell once with that second leg, and then the third leg twice and failed. No continuation, no breakout. That means you can buy right there and take profit if you're expecting some kind of double top there, which I was, but we never got the double top. So they tried to get the double top, but it was really a breakout test area. The profit taking with bar 18 and 19 were extremely weak for bulls. So that means many bulls are betting for higher prices. So I started to think, then that's fine. We're going to overlap with bar 5 body, and chances are we're going to actually test the high of that. We not only overlap with the entire bar 5 body, we started to take profit in that, and I said, expect selling here, but if this is some kind of a trap, okay, setup, which was, that means market makers want to test high of that, run some stops before reversing the market down with some kind of swing short. So I marked that area and I said, it's a strong sell zone, and in order for market to really sell strongly, it needs to create some kind of frenzy. It needs to scare traders, spook them, kick them out of their positions, run their stops. So the best way to do it is that bars high. So that was the first sell, fizzled, and then you got a second sell right there, okay? And that was right there is a also wedge bear flag above the EMA. You can also call it a double top, maybe lower high. Wedge bear flags are basically head and shoulder tops, okay? So, and you see that, and bull wedge bull flags are generally inverse head and shoulder bottoms, so you can actually reverse and go long. So that right there is my swing. I'm expecting at least, 2 legs and a third leg. So leg 1, leg 2, leg 3, we tested the lows. When market is down, okay, it comes down strongly. Even if it goes up, expect another test down here. Maybe even an overshoot. I mean, ATR was insane yesterday, right? I mean, we were 1.15 points and above, finally come down a little bit. But that right there is, you see something like this, mark that, we're going to test that again. Maybe put a 5 points buffer, 5-10 points buffer underneath that low. We will test it. There are buyers waiting there, but we will test it. So that's what we did. And then I'm looking for a wedge here again, 1, 2, and 3. Then we just overshot, so that's basically 4. Or you could say 1, pull back 2, pull back 3. I mean, a bunch of nested wedge setups going on. Here's 1, 2, and 3. That's truncated, or you can say major trend reversal. We were sometime around here. I said right there, I want you guys to be careful because this is going, I mean, yes, this kind of sets up the tone, okay, for bears, but this is too much. This right here is way, way, way too much. It should have been just up, quick double top, and then we continue to sell. Maybe test again and sell. If that's what you're looking for, You do not want to see, okay, bulls actually creating this always in long situations. If you want to see a bearish day into the close, you do not want to see this. So what does this mean? This means I started to showing later on some charts. I think I showed like 2 charts maybe. And I said, I'm looking for some kind of trading range and accumulation. And I said, I'm going to start accumulating some long positions here if I see a strong bull bar. This is the second try for bears and they failed. Bar 60 is a great sign that I need to start accumulating. And as soon as I see bars closing above EMA with bull bodies, preferably consecutive bull bodies, I'm going to be adding a lot more with the first pullback to the EMA. Bar 62, nope, we did not close above it. I actually got kicked out of my runner. I bought it, but I kicked out. So I took profit. And you can follow all these that I posted my charts, including my orders, so you can see what I was doing under ES analysis only. Or if you're on my private Discord, then you can just take a look at the trade alerts page, so you can see it all. So I've been simultaneously posting, but I think the charts that I posted, end of day, I came in and I took 2 trades, and I shared my alerts where to buy and sell. Those are under ES analysis only. Check it out if you haven't seen it. But I said, okay, I'm watching to see what the bears are going to do here. If they cannot break that low, I'm going to jump in again. Okay. And there it is, bar 67. Still no close above it, but I'm going to buy. Because that's basically your second entry long. First entry long from the lows above 59. And then the second entry long. So I went long. And then price came down. I bought again. But I said, here's where I'm going to exit out. Bar 60. I mean, sorry, was it bar 50? I think that was bar 50 I got out. Yep, I got out with bar 70. So it was what, 46.45. I'm sorry, 36.45 was my cutoff. I said, excuse me, this is it. This is where I'm going to exit out of my runner. And I'm done for the day. Market came down, bought again. So that's not where I bought, actually. I'm sorry. I did not buy again. I think I bought above and then I bought again here. But I definitely was done with my trading with bar 70. That's not the one that I bought. If I stayed, I would have bought again, but I think someone was needing something and I need to pay attention. So obviously I missed this leg, but hey, I made money. That's all that matters. That was the end of day trading. So market, and I said market is going to rally quickly at the end of the day, and that's because of this area, okay? Because there is a triangle, so the apex of that triangle is basically a magnet for bulls, and that's what we ended up going and closing the day. So stop orders, you could sell, especially if you do see bar 2, just sell. Even underneath you can sell. That pullback is going to probably sell. You can sell even underneath bull bars if you wanted to. So I don't like selling underneath bull bars, but I will sell. Now bar 7 will get continuation, at least leg. You can sell. I generally expect at least 2 bars continuation. You got 3 bars, 4, 5, 6, 7. So you got 2 legs there. And then bulls started to enter with second entries. Okay. 2 bull bars, 14, 15. If market comes down, I will buy under, maybe the pullbacks and swing. Bar 16 was the pullback, so I bought again. And plus, it's a doji, you can buy above it. You have a room to the EMA. And acceleration bar, exhaustion at the EMA. It's also 2 legs, get out with bar 20. Chances are sellers are waiting. And then you get 2-legged move, but it's a kind of a bull flag. Bar 24 is 2-bar reversal. Buyers are probably above. Now 2 consecutive bars, 3 consecutive bars. Momentum is building. Momentum. Finally, we get a breakout. But again, you're going against something that 50% of this leg, probably sellers waiting there. And then you look for a wedge. That's it. Bar 30, mark that. Look for a bear signal close. Bar 33 is a bear signal close. Happens to be also the second entry short. You can sell it. Why is the second entry short? Bar 31 is your official first entry short, but it's a bull bar. Therefore, wait for the pullback into your wedge box, I call it. I'm going to try to find a fancier word for that. It's kind of long. Okay, so reversal, and then you look for a second entry. Bar 33 is your second entry, but you're at the EMA, and you don't have two consecutive bear bars, and you're selling against this. It's a bit of a problem. So if you're selling, eye this area and get out, because that's the balance zone. That's most likely buyers are waiting, or maybe these wicks, you can extend it, but that's about it. We're probably not going to come down here before going up to the EMA. Bears need a bear flag set up to sell into or low of 24 or to the 14 low or the 10 low. So you take profit at that balance zone or at those wicks just in case, and then you look for failure to go higher to these levels, right? So bulls tried once, came down, bulls tried twice, and I even said it after the session closed. I wrote it and I said, bulls tried twice here and they're failing. I try to buy this hoping to get back up here, but nothing closed above EMA. I said buying underneath the EMA is not going to work like the day before. So I said these bears are not done. They're trying to get a bear flag. There it is, bear flag activation 40, and then you get the 42, second sell. You can sell it, okay? And that's your bear flag right there. Or you can measure it. First target, second target, and then 1-to-1 target. You see how they met that? So that was really nice. I actually sold it, and somewhere around there I took profit. I didn't just take profit at the bar 10 low. I actually measured with Fibonacci extensions just to see, because I do trust those levels. So I took profit. I expanded my profit taken, so that was it. I took literally profit with that bar 50, 55, I think, right around there, 200. And that was my runner. I don't really care for this. So then I start seeing nested wedges. Okay, so I'm looking for now consecutive bull bars, 59, 60. Now, if bears bring this down, I'm going to look to buy again. There are limit order buyers waiting underneath 60. They might be even waiting underneath there, but they kind of bought it right inside that bar 61 wick, and it went with a second leg up. See that? Two bull bars. Chances are limit order buyers are either underneath that bar or right there waiting. They bought it, took profit. No bars closed above EMA, so that bears are not done. They're going to probably try once again. And then they have tried. So where's the next limit order buyers? Probably there, right there. So I'm going to buy. And I said I'm going to also accumulate. Right there, I bought. And then I got out with bar 70. I'm done. So you could have bought the pullback because we're rotating. So you're looking for a very fast bull flags. That's a bull flag. That's a bull flag. That's kind of a double bottom bull flags, or the final flag in a way. And that's about it. So generally when market is swinging long, I look for about 4 bull flags, and the last one is possibly a triangle exhaustion. It's gonna break out briefly, and then it's gonna reverse most likely. So that's what I look for. Anyway, so we're coming down to the Globex low. Market is still selling. Like I said, we're gonna probably test that low. So you see, we just went back up. That's a flag. We're selling. And this is where they're trying to come down to, 32.75. And if they do break it, this is doable also. I can't see, so I'm going to make it 12. That's better. Now, can they make a double bottom and go? Could this be a bull flag? If that's a bull flag, that's a weird bull flag. But it does look like a bull flag, doesn't it? So it's like a wedge, 1, pull back 2, pull back 3, and the pull. So can we actually trap the bears right there? Sure. We have been oscillating around this area. That means bulls may want to go back up, but I don't know yet. Bears want to break that low, and they want to sell. Now, if the bulls show up, they're going to have to get back above 36.67. Now, macro chart, once we get above 36.67, we may not stop, okay, all the way up to 76, 75, say 77, and we might continue to go up to 36.99 or 3,700 round number for bulls. But they need to first get above 36.67. Okay, so since this is still bearish, it's a bit of a problem here. Now, early pre-market, okay, market is on. Okay, so I'm going to get back to 5-minute chart. We are opened within the yesterday's range. Okay, also extended range going all the way to Friday, but it's kind of a channel, bear channel. It's kind of a trending trading range. It's a range, but it's going like that. Okay, so these areas, the top of that channel becomes magnet yet again. So slightly gap down from the close of yesterday. This is still a gap down. So if you're in the encyclopedia, look for gap down from close of yesterday versions, not the gap down from EMA. We are not gap down from EMA. So we are, we might go up, back up to the close of yesterday, and then maybe stay in a trading range possibly, or we're going to get 2 bull bars. We're going to test these highs. So I'm looking for now resistance, which I find right there. So this is resistance, not supply. Remember, support and resistance zones are made to be broken. So if the bulls, in fact, I'm going to take this. I do want to take that. So my first measurement is actually correct. All right, so bulls might try to go test the bar 79 high, and then if we do continue, EMA, 1 hour EMA is magnet, and open of the week is magnet. Remember, certain highs, certain weekly highs, lows, mid-levels, monthly highs, lows, mid-levels, open of the week. These are all, high of the week, low of the week, 50% of the week. These are all magnets at the end of a month, at the end of a week. So, open of the week is not so far away, but bulls need to close 2 consecutive bull bars above EMA to become always in long. Right now, we are smack in the middle of this yesterday's kind of a range. Bulls looking for some kind of higher low setup because they have double bottom, lower low, first higher low, second higher low. They got to do a lot better than this. They need to close bar 1 on its high or above the EMA at least. If it's a doji, preferably on its mid level with a body. And then the second bar, a lot more bullish. That could be a trend from the open for bulls. And the open of the week becomes magnet. So that will be 36.92. Low of yesterday is bar bar 59. This doesn't update. I'm actually going to remove this and put lines. I'm just too lazy to put those lines. I say this all the time. You probably never heard me. After first bar closes, all of this is going to update. It's right now taking its low of yesterday and all that from the day before. Okay? It will update when the first bar closes, and you're going to get the right. I mean, you should have your own lines on your chart. Don't be like me. Don't be lazy. Just put your own lines. I'm glad you guys enjoyed that. I'm trying to show my trades so you guys see what I'm doing. By all means, please do not blindly follow my trades. There are times I'm wrong, but I'm very quick to get out and able to take loss, small loss, and I can always, make it back. But if you're a new trader, it is best to ask questions, watch, why did I enter there? What was my reasoning? What did I see? What setups? What signal bars? First, try to understand that and see how I'm scalping. Again, scalping is very personal also. You might see a, 10, 15 point scalp, but I only go for 5, 6 point scalp. That doesn't make me a bad trader. That just makes me, I'm in a rush. I might have reasons to get out of the trade early. So that's the whole thing, really. And people tend to see 10, 15 minute, 10, 15 or 20 point scalps. The fact that the price actions happen and it's the entire, chart is printed and they see it, that's great. I see that too. If I gave the chart to my grandmother, she would rise from her grave and would tell me, why didn't you scalp that 20 points? Don't you see this? But it's already happened, Gran. I didn't see it. It was going to happen when I was down here. You know what I mean? So don't be like that. I never judge people who are scalping out of early. As long as they're green, they made money, they're good traders. Doesn't matter. The market is still reaching some lower levels. That is still the target. Okay, we're probably going to bounce there briefly. If they're going to break it, because this is where they're trying to come down to. So 32.75, see if they can make it. Still reaching some lower levels. That is still the target. Okay, we're probably going to bounce there briefly. If they're going to break it, because this is where they're trying to come down to. So 32.75, see if they can make it. There's a congestion area. We might even overshoot it before bouncing. There's a congestion area. We might even overshoot it before bouncing. Support here. Okay, target met on the ETH. I would recommend you to not to trade first 3 or 4 news bars. Stay out of it because you're not going to get a good direction. Okay. So there's no counting. You just do not do anything for about 15 to 20 minutes. Let it pass. So bears are still in it. This is where they're trying to come down to. And on the hourly, we have a wedge here. Okay, 1, 2, 3. But if we do break that low, we could end up finding ourselves at 35, 95, 50 area right there. They're still pushing. ETH versus RTH, Logan. If you're seeing overnight bars, that means you're in the extended trading hour, which is the default template. Go to NinjaTrader to your chart, open the data series. Okay, you see it says use instrument setting. That's default. Go up to, down to CME. You're gonna see this. That's the one that you're gonna select to see only the regular trading hours, which is US. And those of you who are new to NinjaTrader, NinjaTrader, just like any other application like Thinkorswim or other places, other applications, other companies, check out their YouTube videos. They have a ton of great examples. Their support team create a bunch of videos that you can learn how to use it efficiently. Chicago PMI 9:45 scheduled, so it's less than 5 minutes. We are still bearish. We are still pushing towards these levels. Let's take a look. Strong bear body, but it's a trading range, so it could be a leg in a trading range, so be careful. Buyers could be down here because we're testing a low of yesterday. We're so close to it. Now, if we do break it, we get a measured move down for bears. But since this is a trading range, and it's a pretty large trading range, buyers are here and low of bar 59. So expect buyers here and underneath. Now, here's a problem with first two bars. One of them is a bull bar and closed above EMA. And the other one is a strong bear bar. This is kind of a confusion. You could tell that this is a leg in a trading range. If that was a bear bar, bar one, we would have continued. Now, we could still continue, but it could be a very weak continuation, okay? So don't be surprised if price actually reverses right back up and gets above, start to close bull bars above 36.57.50 to continue to go up to 36.74.50, okay? So just be aware of that. Maybe some limit order sellers here, but I will not sell this bar. It's just too big now. We have overlapping. We're in a trading range, and now we have 3-bar trading range from the open. And that explained what I explained right there was the trouble. So they trapped some of the bears trying to sell at the low of a trading range. That's never a good idea. And but I did say that we're probably going to, excuse me, I'm doing something here, and then I forgot I was doing that. Sorry, let me fix this real quickly. Online chart. Okay, so if I go to ETA chart, I said we're probably going to overshoot it, but I said this is support. This is also the target. We're probably going to overshoot, and we're going to bounce, and that is right there. So I was not making that up. And market bears didn't even allow this line to be tagged. So we're now testing the midnight open yet again. So bears want to keep the price and the market below 36.50.75. Bulls want to close above that midnight open and go back up, okay, to these highs. And especially if they start to close bull bars above 36.57.50, we're going to continue to go up to 36.75. I'm just going to roll it up. It's actually 74.50, but I'm going to say 75. All right, some limit order sellers are selling here 36.40, but it exceeded way too much above that, so I'm not going to sell it. I'm not interested in selling this because it is, unless if this bar closes up here somewhere, machines will sell that because they see 3-bar micro trading range. That means it's a limit order. Okay, so why did I say there might be sellers at 36.40 a little bit around there? Okay, maybe a little bit above. Because it's a breakout point, okay? So they're trying to sell that breakout point. But because ATR is 12 points, it's overshooting, okay? But they have sold it anyway. The only problem is that I don't know if I want to sell against this bar. So it's a limit order market. They're probably going to scalp quickly. And God forbid, if they actually fill that bar 3 upper wick with a bull body, okay, that's it. You could get stuck, and I don't want to be stuck in that, especially when market is showing me volatile, okay, conditions, volatility. That's now 13 points and an extra tick. I am not, you know, I'm not going to risk my account. It's just too volatile for me. Why? Because it's a news hour. Chicago PMI just came out. And right after that, we have consumer sentiment coming up at 10 o'clock. So this right here, okay, is because of the news. Market is trying to find a direction here. Okay, so bulls want to reverse this. And they're buying. They started to buy. Okay, volatility does this to my computer, okay, to my application. So that means, I don't know what that means. I have asked Ninja so many times. So hang on a minute, let me put you guys. I've asked Ninja so many times, why is this happening? Every time volatility sets in the market, I see really, you know, the news hour or buyers and sellers jumping in. You crash my application, and God forbid if I'm in a trade, and this just doesn't happen, Ninja, I'm just giving you an example of my own experience. This happens to Thinkorswim, this happens to a bunch of other, you know, applications. I'm not sure if this is data connection related, CME related. They can never give me a straight answer, and they don't have to. You know, we sign a bunch of papers, basically letting our rights go, and they don't like these questions, and they could just not answer it. Or say, oh, no, it's your computer. It's not my computer. I have 16 gigabyte RAM in here and decent CPU. What are you talking about? I cannot win that fight ever. But it's not just Ninja or something else. It happens to all of them. I can go back in. Some people cannot even go back in, and they have to actually call support. I don't know why. If anybody knows why and they have better understanding, please educate me. Listen, I don't claim to be a tech expert, but when I start to rant, oh man, if I get a nice good win there, I'm going to go with it. This is the extent of my techiness. Sorry. Today, I don't know if I just woke up from the wrong end of the bed or something on the wrong side. I don't know what they say. I'm generally a very happy person, even though they call me grumpy in the morning. I'm actually very happy. I do believe I'm a happy person. But today is special for some reason. Okay, bears are still trying to see how that area ended up holding bulls down midnight open. That's why I mark it on my chart. It's kind of a important decision making, so it kind of it just removed my. So it looks like we're trying to get down to here, but they do have to close. They need to start closing bear bars underneath 32.75 to get down here. So monthly chart is trying to reach that moving average. This is still, we left this behind. I said, I don't know if we're going to test it. If this 15-minute bar reaches down here in about 10 minutes, we could overreach this. We might even come down into, I have support here. So market is deciding. Okay, so the limit order sellers did sell. So it's a hats off to them. This area was a limit order sell. Plus, you're in a limit order market. Plus, you know, trading range. But it's actually now a triangle. So we're going to break out of this triangle. So these are, we might test this area quickly before going back up. Or we're going to break this, break from the low strong, and we're going to get a measured move down. And for bulls, I already called. So I'm going to look for new levels now. Chicago PMI came out. Now for bulls, now we need to close above 36, 52, 51, 50, 52 area to get to new target for bulls is 36, 57, 50, and then continuation into 36, 67, 36, 57, 50 to 67. But they need to first start to close bull bars above 52, 36, 51, 50, 52 area to become bullish. We're still at the limit order sell area, which is 36.40 to 36.43 area, which we sold actually twice. But once we start to close bull bars above this limit sell area, it becomes invalid. And many bears are going to either exit out or cancel their sell positions, and then they're going to reverse and become bullish. And that could bring us up to 36.51.50 very quickly, and then into those continuations, 57.50 and 67 areas. So that's why we're holding on here, just going sideways and stuck, because market is trying to close above this limit sell zone to eliminate. As more bears get out, exit out, they kind of look, those who actually sold with bar 2 got out and break even bar 4. You see what I mean by there? Those bears got stuck there selling this, completely disregarded the rule of 2, meaning 2 bear bars to get a stop order conditions or sell the market conditions, okay, or sell the close. You don't have that. So they sold it anyway, and they got stuck. So, and then they sold here. They sold maybe at the highs, maybe right there. They sold it to get a break even. So many of them, majority of bears actually broke even. So this area now becomes a decision-making area. If the bulls start to close above this area with bull bars, your target, okay, so we reached my first threshold target, which was the 52, 51, 50, 52. So the next target is 57.50. Let's see if we can get that. And then the follow-through target is going to be 67. So let's see if the bears can actually do this. I mean, bulls can actually tag that 57.50. So 57.50 is next. You may want to scalp there. It's probably going to overshoot it because ATR is now 16 points. Goodness gracious, that is a lot. They're trying to reach here, but you see that midnight open, we're back to it. We need a bull bar close and another one open above it. That makes us bullish. That will make us bullish. It has not made us bullish just yet. Okay, so bears are trying to defend this area because they have sold. Market is trying to observe all of those sell orders to surprise these bears, close the gap at the close of yesterday. Once we start to close bull bars above close of yesterday, on the RTA chart, this becomes magnet. But the bigger magnet is actually open of the week. So bulls need to close a bull bar here. We met my target, the threshold target. Now I need to see a bull bar, and then 36, 57, 50 should be very fast claim. But if we do close above 57.50 bull bars, then we will continue into 67.50 or 67, I should say. So we have a bull close. That's good job, bulls. Now go get that 57.50 Friday special. Don't give in here. Keep going. 57.50. Going once, going twice. We accept check, credit card, cash is king. So let's get paid. 57.50. Come on now. Come on now. 57.50. Shouldn't be a big deal. Going once, going twice. Ooh, it just tested one tick below. just to mess with my emotions. There you go. Target met. Good job, bulls. Now the continuation. If you left a runner, I don't blame you. Okay. 64.50 to 67 is the next target. But they're going to take profit. When you hit a target and they're overshooting, you end up seeing an upper wick like this one on bar 6. That's normal. We're also testing trading range highs. Okay, right there. But we're so close to here, so we're probably going to try to get above that. You see that micro double top? That micro double top, my friends, is something I call the unfinished business. Basically, it's an auction that did not finish. So the market's trying to finish that, and there are probably also buy stops above it or sell stops above it. There are a ton of stuff there, so they're trying to run some of that. Okay, so that makes it a liquidity zone. But really, you're trading the RTA chart, so stick to what you know. Magnets. Magnet is right there, and another big magnet is right there. But you're going to get some resistance there. I had a box there, but then my application crashed. All that I did was gone. So this is still resistance. We are about to test it. I would like to see 67 tested. What if we fail? Well, we could fail at 64.50 or 65 at best. But ATR is so big, we should be able to reach 67. It shouldn't be a problem. But if you're scared, start to take profit late as 65, 36, 65, and just, you know, just enjoy your earnings. And send me some white light. Here we are, we're almost there. But you see how we get closer to the resistance. Some bulls are spooked, and they're wondering if this is a double top. I doubt it. I think this is going to drift a little bit more. Just a tad more, at least to 64.50, and then to 67. But if you're again scared, just take profit at 65, because this can continue to go up to 71.50. So bulls can actually shoot this all the way to 71.50 and furthermore up to 77. But they're taking profit here because they have met my target at 57.50 and overshot it. Once these profit takers get out of the way, bulls are probably going to continue in the same direction. Can they actually collapse here? Sure, they can. But I would like to see a bear bar. Because why would we collapse? Well, we're kind of testing the top of a trading range. But if this bar closes bullish, no, we're going to continue up. So I'm watching how this bar 6 is going to close. It's important. If the body closes like that, we might end up getting another bull bar that fills the upper wick of bar 6. That would mean bullish pressure. How did I get these levels? Oh, you guys are not paying any attention to what I teach you. Which bars range are we stuck on the RTA chart? Just look at it and tell me. Bar 2, yes. So the way that I measure, okay, I take the range of bar 2, right? What did I say about here? I said we need to start building above here. This is the first target. Now, let me move my mouse over and you're going to see it. Right? So it says 51. I said 51.50. It says 51.25. I said 51.50. I need to see a bar close above it. And then I said 50, what did I say? 57.50. So this one is, that's it, 57.50 right there, which we tested. Now I need to see a bull bar closing above 57.50. Then this is my next target, 66. What did I say? 66.50, 67. Yeah, just around there. So what I mean. Now the reason it's there's discrepancy because I'm actually trading micros. Because it's news hour, I switched to micros because I knew this was going to be too much. So there is a 1 or 2 tick discrepancy on the micro, but really if you actually switch to micros, you're going to get dead on price levels that I called. I just don't want to do that right now. You can do it on your own chart. Okay, Brent. I'll shut up. Brent doesn't like this conversation. I'll go. Okay, I'll go quiet. I'll just go back to the price action reading. All right, so they're taking profit. Now, is this collapsing? Well, bar 6 closed really nicely. I mean, it's not that nice, but look where it closed. Okay, so it's going up, and the only problem for bulls was this maybe double top, and this resistance zone was problematic. But still, they closed that bar. You know, it didn't close on its mid, so it's not that strong. It's not a good sell signal bar to begin with. So basically, what's happening here is probably a pullback to the EMA, and the buyers will jump in, and they just did with bar 7. Bar 7 is also a news. Okay, so consumer sentiment is up. We don't care about this, fundamental. So we have already limit order buyers making money at the EMA, buying at the EMA, and chances are we're probably going to try to push a little bit further up. Now, I need to see, for bullishness and continuation, I need to see a bull bar closing above 57.50 if you're on micro. You can just measure this bar 2 to get that level. I think that was 57.25. Okay, so still waiting here. No close above the 57.50 or 57.25 for ES or 57. So bulls really need that bull body, and without that, I don't see a collapse happening just yet, because bar 7 has a long lower wick. So we know the limit order buyers entered the market. So if the bears actually cannot fill that bar 7 lower wick, bulls are going to take over, and they're going to try to finish the job and get another leg up possibly. So then 37.67 or 66.50 for ES becomes reality. Because it's the top of the range, market is stalling here. You already knew that. Similar thing happened right here. So bulls are trying to keep the market, keep the price above the midnight open. Bears are trying to prevent that, because they do not want 2 consecutive bull bars on the Globex chart above midnight open. Because that happens, bulls can swing this, okay, furthermore higher to here, which is an Asia high, okay. So bears don't want it. They're selling at a place. That's why I have this VWAP, because it becomes an average price, okay, average value, because that's where the brokers fill their the short orders for their customers, okay, with hedge funds or whatever, whomever they're working with, smart money. So the best place for them to sell or buy, it's the VWAP. So that's the average price they can give, as close as to VWAP or at the VWAP, especially if price sold heavily before, before then, just like here, they sold. Chances are those smart money, they might be trying to sell right there once again. That's what's happening on the higher time frame, if you're looking for a reason. Now, bears are trying to get back to always in short, but we have 2 bull bars. One of them opened and closed above the EMA, and we have bar 5, more than 50% of its body is above the EMA. So bulls are trying to keep this always in long and break out and go in here and maybe demolish this resistance, and then go up to the magnets above. So we have 2 magnets. The closest one is 1 hour EMA, and the next one is open of the week and high of yesterday. So, to me, listen, I trade the small time frame, so I open my trades on the 5-minute chart. So it's very important for me to see a confirmation, and that's going to be a bull close above 57.50. I see that, then 67 is in the bag, and possibly to extension to 36.77. Okay, so think of this as maybe first buy, second buy, or here is the first entry long. Bulls are trying to get a second entry long. Okay, because think about it. If you're counting from here, this is not, bar 6 is not higher than bar 7 to 9. So basically, that's the first entry long. They're looking for a second entry long. I don't see it yet. Bar 8 does not qualify for a second entry long. It is a high close, but it's not a bull bar. But there might be already buy stop orders stacking above bar 8. Now, bears are trying to prevent this bar 9 to go beyond or below bar 8 or even close below bar 8. That would give them a second entry short. So they are giving in like with everything, coming in with everything to prevent that, because majority of the bulls might be looking to buy above bar 8, although it's a bear bar, but it still could be a good setup because it's kind of setting up as a wedge bull flag or micro double bottom bull flag. Okay, watch now. Okay, so stop orders are activated. They're going to grab a 1 point and they're going to leave their runner to go above the bar 6, above the bar 79, and go test the bar 30 or 29 high. So that means we can find ourselves somewhere here soon. I'm looking for a bull close above 57.50. I need to see this bar close on its high with a bull body and not fail. Again, where can this still fail? Can it fail? Yes, it could still fail around 63 to 65. So if you're still in your long and haven't taken profit, like I said earlier, just be my guest and take profit at 65, because it's going to probably overshoot and tag the 67, but we don't know. So the sellers are still waiting around 63 to 65 area. I still don't have a bull body. So the second entry longs activated above bar 8, but remember the reason why this is coming down, because you're buying above a bear bar. That's the problem. Now, did they make their, so if you entered 1 tick above, that means you entered at 57. That's more than a point. Say it's 2 points. Scalp was 2 points, but still it's very weak because of this happening here. Now bulls on the 1 hour chart, they're trying to close above right here. They're trying to get to the EMA. We're not so far away, but we're going sideways. It's limit order also, but I also see a small inverse head and shoulders. Why? Because a wedge bottom is an inverse head and shoulder. 1, 2, 3. Okay. Here's the inverse left shoulder head and inverse right shoulder. So the bulls are trying to maintain bullishness and maybe close this hour as high as possible because there's a double top here. They want to break above that double top and get a measure move up. Maybe go test that bars high. I don't know. So bears are trying to prevent that. So we're in a trading range. Trading range highs are scaring the bulls, but really what's happening is here and here. It's affecting all of this. And that's why I said you needed to take profit, as early as 57.50. It kind of overshot and gave you an opportunity. So you already scalped, you made money. I'm just waiting to see how the bar 9 is going to close. We did not breach below bar 8, so technically this is still not a second entry short. First entry short from the highs was bar 7, breach below bar 6. Bears are looking for a second entry short. And this might be also a micro wedge bull flag. You could see the wicks of 7, 8, and 9. That presents a 3. I mean, if I go 1 minute, it's probably a lot more visible there. You see that right there? 1, 2, and 3. It's also, what is it called? Bull flat, because the flag portion of the bull flag is actually flat. So there's a trading range. Bull's going to have to make some kind of double bottom maybe underneath that trading range on the 1 minute chart, and then measured move up if that's what they want. But they just got their second entry short now. So bears got their second entry short, and they're going to exploit that now. Unless last minute, well, this is there's still 4 minutes. If they can close this bar on its mid and high level, then bulls might show up again. But that's the fight. You see what happened here? So technically we have 2 bar closes above the midnight open, but unfortunately they're not 2 consecutive bull bars. But even the bear bar actually closed above it. So this makes it very confusing now for bears, okay? Because they want to keep selling this and swing this down, but they were not able to have this bar close below the 36.50.75, and that right there is a problem. So that's still a 2 bars closing above the midnight open, even though one of them is bearish. So does that mean that bulls can try this? They probably will, because that kind of scares the bears. But if they close this bar in 13 minutes down here, open a new bar and close it, then we're going to continue to swing down to here. So we're stuck here. I'm going to go back to the ETA chart and take a look at some levels. So we're still oscillating in this area, okay? Okay, I deleted the wrong thing. Okay, so that's not really support. It's really area of interest. Okay, we're still oscillating there, but we're now below it. Are they trying to close below 32.75 and come down? It's possible. If we do break the Globex low one more time, then we could end up coming down here, but I'm gonna wait. See, I didn't get my criteria meet. My criteria was I needed to see a bull bar above 57.50. I didn't get it. Since bar 6, I do not have that bar. I needed that bar to continue to go up. That was always my criteria, okay, for going long into the follow through. And we just didn't get it, so. So let's just wait, because bulls can still turn this around due to that 15-minute bar that did not close below 50.75. If they do close this bar now on its high, that could be the second entry long, because look what we're doing. We're testing, we breach below, so this is where we might end up actually trapping the bears. While this is going, I'm going to be right back. I need to take a quick break. I'll be right back in a minute. Okay, still no bull closes. But bears are not able to close strong bear bars either. And it's kind of inverse head and shoulders on the 5 minutes also. with double tops above, so the bulls are trying to break, possibly above, and they're trying to prevent it. So midnight open becomes important area for me. You can see this is why I was hesitant that the bears, would sell there strong, and they can't seem to do it. So for bulls, they still have to do a lot of work here, such as 6250 on ES. They have to come back up and test and close a bull bar. And if they do that, then the next is going to be 71. Let me see, I can't see. Yep, so 71.25 or 50, 71.75 actually, to be exact. So, but first I need to see bull bars closing above 62.25, 62.50. And then I'm going to say 71.75 will be next, possibly. Yes, that will be correct. But all in context. Sometimes you get these high twos, they're not really qualified, they're not good bars, but mostly that's how I read them. Oh wait, Brent is not in the trade room, so he can't really hear me talk. Sorry. So somebody answer him, please. Really, if you look at let me go through some things with you. And at the open, some signal bars, Bar 3 was basically it. Bar 3 is the signal to go long, okay? Market is basically telling you we're at the lows, okay, over trading range, and that right there is bar 3 is the signal that market is going to try to get higher prices at the open. And bar 2 is your signal the prior day that we're going to get lower prices, at least for an hour. Again, bar 3 is, or you can even say as early as bar 2, okay, is signaling you that we're going to get higher prices, possibly swing. Okay, we're way at the highs. We're way at the highs. 2 bull bars, that's very nice, but that was high of yesterday. Okay, so when a high of yesterday comes in play, you got to wonder, is this going to continue because we're at the high of a trading range? If you do not get a bull close above high of yesterday, chances are we're going to come down. But still, 2 bull bars, it's telling you we're going to get high prices. We kind of got it. Doesn't matter, that is a high price. That price is higher than that price and at the open price. So bulls got what they came here for. But if they couldn't close a bull bar, no breakout, follow through, so it comes down. They tried anyway, but they failed. Okay, 2 bars, 2 bull bars, and that means probably high prices. You can buy above bull closes and build your buy long position and scalp and make money. 2 bear bars, that means we're going to get low prices at least for an hour, and we did. So and so. And again, 2 bars, one of them closed strongly bearish. Expect for an hour or so low prices. That's all there is to it. If you want to trade the open, that's what you need to look for. Now, what do we have at the open? Confusion, right? Confusion means trading range. Well, we already opened up in a trading range, smack in the middle of it. We tested the low of the trading range very weakly. Now we're testing the high of the trading range. We actually have a triangle. So we're at the apex of that triangle, trying to break out. But to me, even though this is the first attempt to break out of a trading range, failed. Now, we're going to get a measured move set up. 2 attempts failing on both sides for bears and bulls. Measured move set up coming. might even become a trend. We're going sideways, bunch of wicks. So what you're getting here is what L used to call a barbed wire. So you just leave room, okay, to both sides to go test the highs, test the lows until it finally breaks out. It's a balance zone, and market is making a decision here. It's going to break out. Double bottom, double top. We're going to break out soon. Or break down. This is still resistance. We have magnet right here. And another one right there. Okay, 2 bull bars closing on their highs above the EMA. That's good momentum for so far, but we're still in a tight trading range. We need the 3rd bar taking out the upper wick of 12, bar 12, to show us that there is bullish pressure now in the market. We don't have that yet, so everybody's watching bar 13. But bulls are trying to get that higher prices regardless because they bought above either the close or above bar 3. Where can we go? Can we swing this? Yes. 3690 to 3700 is where bulls want to swing this next, let's say like 30 minutes to 45 minutes, 40 minutes maybe. Might be even a lot early. We're not that far away. But this is where the bulls are trying to go to open of the week and a little bit above 3,700. Okay, round number. And this is where if you're going to hold a runner, hold it there. Because we might reach it. Yes, the answer is yes, Lyndon. Because we only claimed one breakout target, which was the shallow target that I called earlier, which was the 57.50 or 57.25 for ES. Now, since then, we don't have a new outside bar, right, or inside setup. So therefore, bar 2 is still your mother bar. So basically, we're trying to get to the next target, 67.50 or 67, like I said earlier. It's excellent. But I think we might get continuation to the 77. So I'm going to scalp a little bit here. See if I can. I'm going to get 2 contracts unloaded at 67. Still haven't met that. It's an overhead resistance here. Be careful. Bulls are trying to get to the Asia high, that gold line. But still, there are sellers here. The EMA is target 1-hour EMA, either on the 1-hour chart, that blue line, or that dotted line. So you can take profit there. I want to scalp the 67. I want to take off 2 contracts. It came so close, one tick close to my target, but did not fill me. Oh no, wait, it did tag. Did it tag? No, on the micro, it tested 66.75. Same as, nope, 66.50 on the ES, okay. It's getting closer. I should get that money, or I got it. So now I have 2 runners sitting at, I'm going to take out 1 more at where I called earlier, 71.25. See if we can get there. Bulls need to close a bull bar above 67 to continue to go up. And if we do break out of 36.70, I'm going to unload another contract at 71.25. Or, you know what? 71.50 on micros. What made me go long? Are you guys going to make me explain this one more time? Okay, let me begin. But I need to first ask, okay, so you are in the trade room, right? Because if you guys are not in the trade room and attending the live seminar, and yet you are in the trade room Discord and asking me these questions, I don't want to go through it all. So I'm confused who's who at this point, and I want to give, priority to those actually attending the live session. So please don't waste my time. I know you are in the trade room, so I'm going to explain it to you. And it will be a good exercise for the rest of, because I'm in a trade and I need to manage this trade. All right, so here we go. I said at the open, we need 2 bear bars or 2 bull bars to start a trend. We started in the middle of a trading range right at the EMA. So that means it's possible trading range conditions up to 7, 8 bars until the news come out, right? So I said, pay attention to the first 2 bars. First 2 bars happen to be first bar being bullish and the second bar being bearish. That right there is screaming at you, we are going to be in a trading range for a while, probably until 10 o'clock. So bears try to sell it, but we're at the bottom of a trading range. We're not breaking that, obviously. Now, a bar 2 didn't get continuation bear bar. So that tells me right there I can actually buy the next bull close. Maybe I can buy right there, put a buy stop order, and the bulls actually activated you. They ended up going up to my target, came back down, heavily started buying with limit orders, but bears are not able to close bear bars below the EMA, okay? So that means they're going up. So what does this mean? Up. We're going to go up. Higher prices expected, so the magnets become the targets. Make sense? Don't be shy asking. I just need to know, who you are, because like I said, I want to give the priority to the trade room, live trade room members. We all want you to join the trade room, obviously, but I'm trading, and sometimes I repeat the same thing like 3 times, and it could be redundant for other people, but please don't be shy just because I'm saying this. Don't be shy and scared to ask. All right, I want to unload 7150 is my another contract I am unloading. Oh, you kidding me? It hit 7125 and I'm right 1 tick above it. It's right there. I was originally at 7125 and I fiddled with my exit order and I put it 1 tick above. That right there is a 1 tick greed and I'm paying for it right now. Everybody is getting filled and I'm not. Sorry about that. Mute. Okay, so let's see if it can actually get to my target. But I'm bummed but I'm the cause of this. So I can just, lower my exit order and take profit, but I'm not going to do that. I'm going to wait to see where this bar is going to close. So now bar 13 did not close where I wanted to close, 1 tick above 67.50. I'm going to see if bulls can actually close this above. I should have kept my exit order at 71.25 on micros. So I'm just going to be patient. I'm not going to move my order around because every time I move the orders around, I end up getting stuck at the end of the line because futures is first come, first serve. So my stop is at this point, I'm under bar 12. You can leave it under bar 10, but there's no need for that. We're probably going to test the EMA, 1 hour EMA. I'd like to see bulls actually continue to go up to 36.76.50, but 2 bars did not close. Okay, so actually the second bar closed. Bar 14 closed exactly where I wanted to close, but the problem is this resistance is trying to act like a supply zone, but I don't think they're they're going to sell this. I think we're going to work our way up a little bit more. These bulls are taking profit here. If they get out of the way, I will be making money once again. But if this bar closes really bearish, I'm going to hit close and I'm going to take all of my profits. So I don't need to worry about this right now. This should get continuation a little bit more. Yep, there's a wedge. So 79, 6, and 14, or 1, 6, and 14. And there's that problem. But it's so strong, okay? And I really like to see a measured move up. So I like to see bulls actually get back up somewhere here, at least a little bit above the EMA, 1 hour EMA. So I am not spooked just yet, unless this bar closes very bearish. But we could bounce right here with limit order buyers at 36.62 possibly. And since ATR is, what is ATR? 650. Okay, I'm sorry, 950. Market can go up 9.5 points minimum. Okay, 36.62 and above, limit order buyers are buying. Limit order bulls are buying. But we haven't really tested 62 thoroughly, so we might come down a little bit and look for buyers there. Why is that? Because bar 13, guys, is a breakout test. Sorry. I'm going to try to use this right there. Okay, so you see that breakout test level? That's where we are. So many bulls want to actually buy the close of bar 15. And when it closes, even if it closes bearish, it is possible that bulls might buy it. I think bulls are still trying to get to the 3,700. That's the swing long target. So I'm not spooked. One of my contracts is sitting at 71.50, and the other one I am going to actually now put it towards 84.75, 85 area. So I want to see actually bulls demolish this resistance and keep going up to this climactic bar highs. Okay, these are climax bars for bears. So we could just get vacuum right up there if they can use this area as support. But I did say that this area is still an overhead resistance. And I said that we're probably going to test the Asia high. That is the Asia high, that gold line. We tested it anyway. So bulls kind of accomplished their objective by getting rid of bears, okay, right there. And now they're trying to swing. They're trying to swing all the way here. They want to overlap with this body. You see that 15-minute bar? If I want to put a line there, you see that right there, that blue line? I'm going to leave it there. 77.25, 77.50 is where the bulls actually want to overlap a body or something, okay? So that tells me that they're trying to observe all of these sell orders in this overhead resistance. That means on the hourly chart, 1 hour EMA is magnet, and we're trying to put a bull body above it. Bears want the double top, but I don't know. All right, so the limit order buyers kind of entered here. We might still come down a little bit to 36.62 maybe. But if they do close a bull bar, that's going to be high 1. If you're counting from the highs, that's high 1. Or if you're counting from the lows, that's going to be high 3 possibly. But I think we're going to, okay, so they're coming down back again to 36.62. Now, if we get another bear bar with a lower wick, and a small bear body, that means this was just a pullback and the bulls are going to enter. But this area is still, valid resistance. So don't discount the bears just yet. We're pulling back. This is the second leg in the pullback, okay, from the highs for bears. So if this pullback finally dies and the bulls jump in, we can break out. And the target will be 77, 36.77. I didn't like this, so I took one more contract off, so to manage the risk. I still have one more contract sitting at 3,700. Okay, with micros, I'm trading with the micros. I'm actually one tick below that, 36.9975. So the one that I was waiting to scalp at 71.50, I kind of took it out right around here. I just didn't want to wait for this pullback. Now, if I do see bull bars, I'm going to keep adding more micros, okay? But right now, we just pulled back. So now we're, again, activating more limit order buys here. I just wanted to manage the risk and lower it as much as possible because I don't know if we're still at the top of a trading range and bears are trying to sell it. I think it's a preemptive attempt to become bearish in what seems like a bull market at the moment, or trying to be a bullish market. So I'm going to buy the bull bars closing on their highs. Like if this bar closes strongly, that's going to be my high 3 long entry. I'll add whatever I took out here. Now, at this point, I'm using these higher low levels for ATR. I'm going to grab some water and be right back. I'm still in my long and still green. Now, the next scalp target is at 77 area for bulls. If this bar closed bullish, chances are we're going to go test the EMA first. And if we start to close above it, we could briefly test the 77. Now, but be careful. Bears want a double top of some sort because they do see a wedge. They want to see a double top, maybe higher high double top and a major trend reversal. So we're not that bullish, but we're trying to. Okay, magnets above. I'll be right back. Okay, back. All right, what's happening here? I don't see a bull bar yet, but bears are trying to get that double top. So I think I'm just going to exit out. I just took my profits. I'm not going to wait. But if they do close a bull bar, I'll look into entering again with the target at 3,700. I just don't like this here, but it's normal. This is normal price action. Okay, so you're at the highs. There are bears trying to sell. Bulls are trying to prevent it. But sometimes I do see sometimes price actually fails to close or tag magnets like 1 hour EMA because market is trying to prevent bulls from getting there. I have seen it before, and then suddenly we end up getting a double top, wedge double top, and a major trend reversal. I just don't want to be in it. So I took all of my profit. I am flat right now. I will enter again if we make a new high. Okay, so you can see if this is a wedge, say 1, bar 6, and bar 14, basically, you see what's happening here? Bears have closed a bear body, bar 16, and then now they're retesting that area to sell. So this could end up getting a 10-pointer or maybe even 15-point for those who might have sold underneath bar 14. And their 10-point is right there. So I'm not going to give back my profits. If that's the case, I have to run the scenario and say, if these bears want their 10-point, you know, and they're just retesting and they want to sell this and this ends up closing bearish, I don't want to be in it. I don't want to give back. So I just went flat. I'm happy. I made money. Seems that bulls are still trying to break from the highs. I use the bracket orders as well. I mean, especially if you're trying to grab a 1 point. But here's the thing. When the market, the ATR is, you know, this high, above 5 points, and you have some volatility in the market, 1 point scalp becomes a little bit of a nuisance, right? So you want to get a lot more than 1 point. So you can go for 2 points. So I have my ATM orders. It's, you know, created set for that. And I go in with those and I grab those initial. It's basically what you're doing there is you're testing the market, okay? You're testing to see if, you know, you're going to get that 1 point, or if it's too volatile, minimum 2 points, right? If you're struggling to get that, that means you're in the wrong direction, most likely. So that's the whole point of scalping. And plus, S&P, you know, traders' profit is 1 point. But, you know, this was said by pro traders long time ago, years and years ago. I mean, since the pandemic, there's a significant amount of volatility in the market now, right? So we're no longer trading. It used to be, we used to trade between 1.5 and 3 points. And if any time the price actually went above ATR 3, okay, oh my, you know, we have such volatility in the market. Now we're dealing with, okay, ATR being 15, 13 at the open, or 20 at the open. It's ridiculous amount. So trying to grab a 1 point is no longer, you know, an issue. People actually, traders try to, you know, grab a lot more than that now. So I do use the ATM orders. I have ATM orders set up for every condition, basically. But stops are different, okay? The way that I use the stops, if I'm swinging, okay, and if I'm in a swing, long swing, I'm going to use the higher lows, lower lows, higher lows. And as market makes new highs, okay, and comes down and it goes back up again, I'm going to use that higher low to move that stop from there to there or there to there, okay? So that's the way I use it. But if I'm scalping, I'm committed to make certain amount of ticks or points, and I don't care about swing setups or any of it. I'm just in and out. I cannot, but for any kind of scalp, you know, you have bad risk reward, you know, you're not expecting, your risk is going to be always bigger than your reward when you're scalping. So that puts you in a bad trade automatically, okay? But to me, you know, scalps are personal, especially, stops are personal when you're scalping. So you have to ask yourself, if I'm risking 1 to 3% of my account, you know, how much is that? So you have to do the math, right? Basically, you know, whatever that math comes to is your stop. It could be $200, it could be $300, it could be $800. I don't know. There's no set in stone rule what that stop is going to be. So if you're going for a 1 point scalp, your stop should be at 2 points. Okay, then do that. Or 3 points. Now, can you afford 3 points? So I'm basically looking for a very quick scalp, okay? I don't really care for the stop because I'm probably going to make that money. Because it's a high probability entry. It has to be. If you're scalping, that's the number one thing that you have to pay attention. Are you entering with a high probability entry to make that very quick scalp? That means you're betting on bars to move extremely fast to give you that, you know, reward very quickly. So from the lows, we have head and shoulders pattern. We have a bull flag. We have a second bull flag now, okay? Most likely we're going to get the third and the fourth, so we're going to keep going up. So EMA seems like another target here. But what if we reverse here? We're not making new highs, so pay attention to that. We have not went and test bar 14 high yet. Bulls are trying, but when can the bulls give in or give up, right? So they're trying once, they're trying twice. If we end up getting bear bars here, that means trap. So that means their stops are here, and the bears want to run those stops to create some kind of a swing. But once we make a new high and we close that bar bullish, bears are going to lose ground. But you see, every time they get closer to the 14 high, they're taking profit. They get closer to the 14 high, they're taking profit. So this is a brick wall here, okay? I'm going to get rid of this so you kind of got the idea why bar 14 is important and its range. Bulls are trying to crack above that so they can go higher. But when you try, okay, once, comes down. Try twice, and it's come down. If this bar ends up closing down here, bulls are going to lose ground here. And they might accelerate to get out. Bears want to test the double top neckline bar 16 because they know there are a ton of stops sitting there. These buyer stops, they want to run them. They want to kick them out their positions. So I'm watching who's going to win here. Where that bar 19 closes is important. This is also 18 bar range. It's not a big range. It's not that big. Okay, we could double this if bulls want to break out. Or we're in a trading range and we're testing the highs. We're just going to come right back down. So 18 bar reversal is possible, but I don't think we're at the highs, and this isn't that high to reverse anything. Or we're going to get an 18 bar breakout and we're going to continue up to my 3,700 swing target. So bulls tried once, 14. Bulls tried twice, bar 17. And still no new high. And this is another reason I went flat. I didn't like this area, and it shouldn't be that difficult to test that 1 hour EMA. And if the bulls are struggling to test that 1 hour EMA, they're probably going to struggle to close above it. So there's a brick wall here, and we're having a hard time breaking that brick wall. Bears are trying to sell once. Now they're trying to sell twice, but where is the strong bear close body? I don't see it. So who's in charge? I think the bulls are still in charge. They're trying to break out with the second try. So if they prevent bears from closing a bear bar, we might still break above that bar 14 strongly and go right back up. Target on the Globex is overlap with this bar, bull bar, which is 36.7725. So that's where the bulls are trying to get to. Scalp target is 36.76, possibly 83 to continue. So there you have it. We have an outside up bar 19. It's a breakout. If they do close that bar strongly bullish, that means bar 16, and then we get a continuation bar. Bar 16 low becomes the new higher low to move those stops from under 10 to here. So the swing longs are still in their successful swing. And next is, let's see if we can get that 36.7725. We still don't have a bull bar close. This hour ends in 25 minutes. So bulls need to do a good job and close that bar above the EMA on the 1 hour chart. Here's a problem with bar 19. That body did not close one tick above bar 14. It's still an outside up bar, and it's a now IOI, 18, 19, 20. Okay, so this is a breakout mode. If bar 20 closes on its side bullish, then we break out to the upside. But there's something problematic here, both on the MES and ES. These bulls were not able to close that body one tick above the prior high. But objective met, which was the EMA. Bears see that, and they're wondering if they can actually exploit this and actually trap the bulls. So everybody's now watching bar 20. How will it close? There's a wedge there. We might go a little bit more up perhaps, or we're just going to break out altogether. Bulls are trying to get to their 40-point target. Since they move the market so much from there to there, okay, I begin to count with the next bull bar. I can start from there. So that's 35, 40 point. This is where they're trying to reach. Okay. Bulls. Now we have a breakout. Good job. We reached my target. What was that? That was 76.50. Now they're trying to get to 36.85. We just overlapped the bar, which is great. That was also the objective for me, for bulls. So we're still in the swing. This right here is the target, 86.25. Open of the week is also magnet. So see if we can actually keep pushing this to 36.85, 36.86 area. We have a breakout. So is this the wedge? Or is this the wedge? 1, 2, and 3, or 1, 2, 3. And this is now a wedge breakout. So we continue. Where I marked 40 is your target. You can take profit right at the 85 or one tick below 85. But since ATR is 10, we're probably going to tag 85. 83 to 85, we should tag. We're going to come back a little bit because bar 20 could be some kind of an exhaustion, but it's not as big as 13 or bar 5. So I don't think this is exhaustion. So we might continue to get a little bit more room to the upside. Again, 36, 83, 85, and 86 targets. Some bulls are taking profit. You can see the body of bar 21, exact same level as 20, but I don't think 20 is exhaustion yet. We still have more room to the upside. So we should continue to go up. We still have more room to the upside. So we should continue to go up. At least to 84, 84, 75, 85 area. We will come down, but we just need to push a little bit further. Bulls are trying to reach 3,700. Excellent. I've been long, so I jumped in again. And I put a buy stop order one tick above 19, even though the body did not close, but it was an IOI. And I said, this is going to break out because I'm expecting at least 3 bull flags. Bull flag 1, bull flag 2, bull flag 3. So if the bull flag 3 is around here, we might even go further beyond 3,700. So there's room. So I bought in and I took profit. 2 ticks, no wait, where did I take? I took profit 3 ticks underneath 85. got filled, and I am looking for a little bit more continuation to see if we can actually continue to go up to open of the week. There's still room. So I'd like my runner to actually hit about 86 at minimum. Now bears are trying to get a signal bar, but I think it's too early. I'd like to overshoot. I'd like to see this overshoot 85 just a tad. But if it doesn't close bullish enough this far in 40 seconds, I'm going to be out because it can come down and I don't want to give so much back. But the bulls are trying to use this area as support. Now, the breakout, the bar 20, so we can actually end up coming down before going back up again. I don't want that. But there is still a little bit more room if you're holding 85 to 86 area before coming down that we should tag. We have a breakout bar, 20. It's kind of scaring some bulls. They might think that this is exhaustion, but it really is not the biggest bar. Okay. So but if you're scared, you know, take profit at 85 or 84.75, but it's going to overshoot. But it's going to overshoot. There you have it. Come on, take out that high, bar 21 high, 40 point is right there. Yeah, I mean, if you, why would you, okay, let's talk about this because this is actually good that someone's saying that if they were trading on their own, they would have actually shorted bar 18. Now, why would you short bar 18? Because you automatically think that since we're at bar 18, we're going to reverse. That may not happen. Bar 18 can also be a sign for continuation in the same price action direction. So, so you can see that bulls are printing a lot healthier bull bars. Always look at the bias. Okay, so the bias comes in the form of good bar closes, right? So the entire BTC course is, Brooks price action course is built upon the trend bars, you know, lack of a better way to describe it. So the whole thing is teaching you, be a stupid trader, right? So what does that mean? You know, obviously you're not going to trade stupid, but what L is telling you, don't complicate your trading. Look at the bar qualities. If the market is telling you a bar like 2 never gets a continuation and you end up getting really good bull closes and bull flag after bull flag and always in long, okay, we became always in long here and then we confirmed that we're going to stay always in long. So you look for at least 3, preferably 4 bull flags in a trend, right? And bar 18 is not a second entry sell signal. You got the first entry in the resistance. That's expected because I said that's the top of the trading range. But there are no strong bear bar closes. I took my profit. Now, another reason why I took my profit, because I was in a micro. I wanted to jump in with E-mini. So I didn't want to manage 2 different, you know, micros and the, you know, E-mini. So I said, you know what, this is going to probably come down a little bit. It's still acting as resistance. And the bears are looking for a double top. But let me take my profit in micro and get ready to buy with E-mini. So that was also another reason because I expected this to go up. And then once I saw bar 18 never closed bearish and no, it didn't present a second entry short, there's no need to sell. You got an IOI now. Bar 19 is a breakout bar. It's a weak breakout bar, so I kept my eye on that and I pointed out, you know, bar 19 body did not close one tick above 14, but still it's screaming this is going to go higher, right? Because it is a bull flag and it goes up. So I took profit. Now, why do I take profit at and below 85 level? Remember, round numbers and fives. If you put every 10 points, say 35, think of that as 35. Okay? Pay attention, please. 25. This is important. This is another way I scalp or swing S&P. This is 15. Every 10 points, right? I look for price. If it's coming from down below, okay, it's probably going to bounce to the downside before going up. It might even do it twice. But once it gets above, it's going to go up. If it's coming from down below, it's going to bounce. This is where I take profit. Opposite is also true. If you're coming from up above, it's going to bounce there, maybe twice. Maybe it's going to swing. Or it's going to break down, coming from down up above, minimum 5 points, 4 or 5 points. It's probably going to bounce. So I can either look to buy if I'm not shorting, or if I'm shorting, I'm going to unload a bunch of contracts there. Okay? So if it's going up now, if it's coming from down below 4 or 5 points, and if I bolt that, reverse that, I'm going to take profit around 35 because it's going to bounce to the downside. So to me, we were up for a while, and we're getting very close to that 36.85. So I said, you know what? I'm just going to take profit here. So I took a really nice profit, and that was it. Now, we can still go back. We have not tested 36.85 yet. Bulls are probably going to test it. Sometimes it overshoots. When the ATR is too big, it overshoots. I have a way of trading that as well. If we're looking for average price entry, say we overshoot 85, instead of bouncing to the downside, right? Say we overshot it for like 3 points above. Then I would look for the distance from that 85 to that high, and somewhere in the 50%, I would put a sell order. Once I get hit, okay, my sell order hits, I take profit scalp at the 85, and I look for a breach below the 85, because machines are going to sell that regardless, even if it overshoots. It's kind of an advanced way of scalping. I'm not going to get into the details of it. So all I'm saying is that market moved another 40 points, okay, and it's kind of taking profit around here, but it really is not full 40 points. So now we're above the 1 hour EMA, and this hour is going to end around just about 8 minutes, okay, in 8 minutes. Can we continue to go up? We could. Market could be looking to make some kind of wedge. So down, we might come down a little bit, only to go up for the third time, okay? So that means we might end up testing this bearish hours opening or the high. So all I know that they're taking profit right now, but it's not that bearish. It could be just a pullback. And we could continue to go up to 36.93 to 3700 area. 36.93 is slightly above open of the week, and 37. So I still think that the bulls are going to try to get up here. Now there's a wedge. Let me get rid of that. There's a wedge, 1, 2, 3. Bar 22 did not close a bear body, but it did breach, and it's a good bear body. So most likely bears are going to try to get their second leg down here. Bar 20 did not look like an exhaustion bar to me because it wasn't the biggest bar, but still I expected continuation. I got my continuation, but now this breakout is dying. This breakout is failing. It's not getting any continuation, but I don't know that yet. So I'm going to give these bears a chance to sell twice or get a second leg and see if they actually get trapped with that second leg and the bulls take over and go one more time. So you can see that we're making new highs and we're making higher lows. We're not making new lows. So what does this mean? Is there a gap? Yes, there is some kind of a negative gap there. We already have a gap here from that high to that low. So we're bullish. So if you actually end up going to a line chart where institutions actually look at, you're going to see those gaps even clearly. See those gaps right there? That's strong. Look at that gap right there, strong. So first flag, second flag, third flag trying to break out. Most likely we will finally get into some kind of maybe a triangle and then a false breakout. We might come down from there. But I think the bulls are going to try one more time. Even if it's a small push, but I think they will. If they do get a second entry short with bar 24, okay, then I don't mind selling and taking profit maybe 10 points down here. If I measure from the high of 22, or at this point it's just so close, high of 21, I would probably want to take profit around 74.50 or 75. It's a quick scalp, but that's about it. So I'm looking to see if they're going to get that second entry short with bar 24. But market is bullish. I don't want to sell against a bull gap there. I don't really care about a 2-point scalp, so I'm going to let this go because I think the limit order buyers are below 22, somewhere around there, wanting to buy. This is a bullish trend. Trying to sell against a bull trend can be deadly upsetting. Okay? So look to buy instead of selling. We're above my threshold, 36.7725. Bulls are now trying to go and test the high of that bar, bull bar, which is right there, 68.50. Why? Because they trapped so many bulls trying to buy with that bar, okay? And the market started to swing down pretty significantly. So market makers know that this is the money that they placed in the market to, set that trap. So they want that money back now. So they're trying to get back to 88.50. So therefore, on the 5-minute, bulls are trying to, I can't do straight. There's got to be some kind of hotkey here for this application for me to draw straight lines, but they're trying to break above that high to get a new high. So maybe we could just get back up to, let's see, 89.75. Open of the week is right around the corner. I say that, but it's actually 12 points above. So it's watching to see if we're going to pull back down to 36.74 area first, 75.74 before going back up, or are we going to trap the bears trying to sell with a second leg down? First leg down 22, pull back 23, second leg down 24. If we can trap them, then we continue to go up to 93.95 area. So it's difficult to sell, right? It's high one, if you're counting from the highs. Okay, so that was the second leg down. Now, technically, it is still second entry short for bears. because it went one tick below the prior bar's low. Bar 24 is also outside down bar. So now you have an inside, outside, inside. So you have 23 inside, 24 outside. And bears might be trying to get that reward here as early as they can come down to 75 and take that. I'm just not going to sell this. I don't care about a 2-point scalp here. It's too bullish. I don't want to be stuck. But they're trying because they moved the market 6 points. They want to tag the 10-point. But what if they get stuck at 9-point? So they couldn't even come down 9-point. They actually, 75.50 is the 9-point. 2 ticks to their target, scalp target, they're getting stuck. So this is why I did not want to sell. And you have a wedge here. Up, down, up, down, up. So, or down. So down, down, and down. It's better not to go against a strong current. Go with it. Can they still make it down to the 10-point? 10-point is at, for bears, it starts at 75.50. Scalping might start there. It goes down to the 74.50. I am not after this kind of scalp. They can still make it. Too bullish for me. However, there's a much better wedge now. So, but I don't see a good higher high or lower high sell signal. So I'm still bullish. So here's an example for you. Here's when I would look to sell. Okay, so trading range open, right? So we found buyers at the EMA, and we make a bull flag, another bull flag, another bull flag. There's one over here, so this is your fort. And that's the exhaustion bar I'm talking about. I don't see that yet, okay? So exhaustion bar and midday reversal, and that's what I'm looking for. We might get that around here, okay? So that's why I'm not interested in selling this. So this is what we're having here. It's almost like something like this, in a way. So I want to see really strong, like this is a really nice setup for reversal, right? I don't see that yet, so I'm not really interested. And you can see the 15-minute chart, inverse head and shoulders. Left shoulder, head, right shoulder, break of a double top. They're trying to get cup, handle, and then continue to go up. We could end up going all the way up here, guys. So, guys and gals. Now, in order for me to sell this, I would want to see, okay, let's take a look here. When do I give up being bullish? Well, if I see a surprise bear bar like that, even that area could actually bounce, make a double top, and then come down. Sure. But even if we sell, and if we do come down to this breakout points and this congestion zone, there are buyers probably waiting there, and they want to buy. We could end up going back up, make a double top. Then I would love to sell that if I see a good signal. All right, so the bears finally got their 10-point scalp. But if you're actually measuring from underneath 22 or here, that's a 5-point probably. I'm measuring from the top of pivot point. So right there, pivotal area. So, okay, so good for them. They got their money. And I still think that this is still bullish. We have targets above. I don't see a strong bear bar. Even if we do come down here, we could use this area now, this as support. I think it is now support. safe to say. So maybe a better wedge, one down, up, second down, up, and here's the third down, possibly. And we might be actually building that handle here. So I'm not really spooked here, although I'm flat. Can bears actually sell this? If they do sell it, they might end up coming down to the EMA. But I think the buyers are still waiting there. So if I was actually in a trade, that bar would have scared me a little bit. That to me, bulls might be giving up here. They tried once, they tried twice. So now they're actually trying to get to the 15 point. If you measure from the top of bar 21, they're trying to get to the 15 point, 14 point area. They already did, so that's it. They're right there. It'll probably going to bounce a little bit as they take profit. But if they start to close below 1575, giving you exact measurements, if they close below this pink line, they're going to end up coming down to the 20 point. That puts us into that congestion zone that I talked about. But there could be still buyers waiting in between that line and somewhere here, and then we could still bounce and go back up and make a double top. That I would like to sell. But I think this is going to bounce. But it still has a look and feel of a surprise bar. Now, if it closes on its low, it's surprisingly big, might get continuation into this congestion area. The problem here is that there's still a gap there, although we might have closed it now. And then we're going to close that. So as the bullish gap closes, market becomes less bullish. But we have a new high, and as long as we don't dip below these lows with bear bars, we're still bullish. We can do maybe a deep pullback, only to go right back up again. Okay. So those of you already in the room, in about 20 minutes, I'm not going to close the webinar altogether because today Brad and I are streaming, so Brad will come in for the afternoon. I don't know exactly when, but he might just jump in. Okay, so that is right there strong. So they're trying to get if they close it like that, now we're coming down. Okay, so 19 point to 20 point right there, we could continue to sell. But so this is where I say I think with bar 26 that bulls actually did give up. And that I said that would have scared me because then this area is target and we just met. And I think the market wants to test those lows now. Why? Because if you have wedge here, that was the last push, and the bull push actually started right there underneath bar 20, actually with the low of bar 19. So the bar 19 low is basically the target. See that right there? Okay. I would have been, if I was still long, I would have been out with bar 26, and that to me is a give up. And they kind of did. All right, so we're testing that congestion area, and we're probably going to bounce a little bit. I'm going to get rid of this now. We're probably going to bounce a little bit, but this is too much selling. Wedge reversal. Okay, 24 is the first bar actually closed outside, and then we retested, and then we have a huge sell bar. So I thought maybe they would get continuation into 20. We might still find some kind of buyers here, but once I started to see that they were breaching 1575, that's it. 20, they're going to get to it. Now, if they actually, after they bounce, they breach 2175 with a bear body, they already did, but they need to close the body there. That means we're going to continue. Can we come all the way down here? We could. We're in a trading range now. We're still in the trading range. So if this bar now closes somewhere around here, underneath that pink line, we continue down. If market wants to stay in this trading range, okay, so that means they need a gap bar, bear bar underneath EMA closing, and they need continuation. First they need to then they need to close that bar below that line, and they would continue to come down. Open of the day would become magnet. That's a bummer. I'm going to measure something real quick and see how much they pulled back. Okay, so they pulled back 33 to the 33%. Now 50% becomes magnet. But I need to see, which is a little bit below close of yesterday. Let me get rid of this now. I need to see that bear bar 27, close that body below that pink line first. Okay. Now, when do we become, when would this bull trend become unstable? Well, if we, like I said earlier, if we do start to take out these lows, okay, that's not good. You do not want those higher lows to be taken out if you're in a swing, because you want to get to here, you have a target, okay? Now, we might be building that bigger triangle now. We could still break out and get there, but if you're still bullish and looking for bullish targets, you might want to rethink this now, because we're going into a bigger trading range now. Trading range highs, another trading range here after this bull trend. And, you know, the way the bar 27 closed, that's very strong. So it might continue to come down a little bit more. Bar 28 is not an inside bar. It actually made a new low, so all the stop orders underneath bar 27 actually activated with bar 28. So that means those who sold with stop order underneath 27 are looking to make money, so it's going to come down a little bit more. Bears want to test bar 16 low now. Close of yesterday, a little bit below, is 50% pullback, right around here, 36.55. So if we do bounce, sellers are going to trail their sell stop underneath every pullback bar, because we do have a strong leg down here, 26, 27. So as we go up, they're going to trail those stops, if they haven't sold, underneath those bars, and then they're going to look for another leg down. Those actually who sold below bar 27 made a point. So if you actually measure it, it adds up more than a point to fill everybody. So those bears actually made money. So they're thinking, if we're able to make money, 1 point scalp, there might be a continuation down. So some machines might be calculating the midpoint of this move up, 50% right there. So these bears are probably looking for continuation down. And that's it. Now, what if we get a bull bar and suddenly this reverses? Then these bears are going to be stuck here. Okay, so, but when you have a setup like this, I expect more continuation, at least a little bit. And even if the bull bars start to show up, okay, so I'm going to get rid of this. Even if the bull bars start to show up, bears are going to try to sell and break even, because then many of them will be stuck here. Even though they made a 1 point, they're looking for continuation. Their runner is not running. And they're going to be disappointed with that if we end up getting a bull bar. So they're going to try to sell again to get back down. But this bar closes bearish. We're going to continue to come down to the 50% possibly. So 36.55, we might test. And we have a gap, 3-bar gapping, but say this bar 28 closes bearish. So you can also find your continuation target a little bit further down, depending on where that bar, this bar, current bar closes. If it closes like that, it's probably going to continue to come down. So that means there is a congestion area. You see that tight trading range right here? This is where market is trying to come down. And we take out that bar 16 low, many bulls will be very upset because their stops are probably there. So what happened to our bull trend? Well, it just died after this one. That's too much of selling. So I'm pretty much, I don't care about these levels anymore. Okay, so we have a 3-bar gapping for bears. We can continue to sell this into 47.75, but first 50% pullback. When you measure from this low to that high for today's, or you can measure from this low to that high depending on what you're measuring. So 36.55 I said is target. We just tested 1 tick above, so that met. But if you're measuring from this low to that high, then your 50% is somewhere a little bit lower. Sorry. That's right there, 52.75. And you now have 1, 2, 3, 4 bear bars. We just met my target to the tick, 36.55. So we're going to bounce here. Remember, it's the price level that ends with 5, so we bounce. Even if you bounce a little bit, I do have a target right there. You can also take a measured move target. That's one target, but that's not measured move target. You can also say, well, what if the first breakout came here? This is my measured move target. 54.75 we just met. That was the first structure, but we also broke that. Can we get continuation to the 36.75? Well, if we do start the break below 47.75, the 3 bear bar gapping, once we accomplish that, we can end up coming down here very quickly. Back to the midnight. So what happened here? We couldn't get to my target, but it's safe to say I was looking for an overlap with this bar body, right? Did we get that? Yes, we did. Now, I was really looking for continuation. It didn't happen. Did something cause this? I mean, today is nothing but a Fed day, right? So we had, what time is it? So it's almost noon. So Michelle Bowman was speaking. Maybe she said something. I don't know. Thomas Barkin will come in noon 30, so 11:30. I'm sorry, 12:30. So we're now in a trading range. So I'm going to look to see if I can find something similar to today's price action. All right, so we're bouncing. Although we overshot the 36.55, I said we're going to bounce here. We are bouncing, okay? We came very close to this low to this high when measured. 50% was right there, that dotted line. So that kind of met. But if the bears close this bar, another bear bar, we're probably going to come down to my target, measured move for bar gapping. And that will be continuation target. But bears need to close a bear bar below the 36.55 to continue down. 47.75 is still target. How? Okay, I am surprised, I have to say. I did not expect this. I did say if there's a surprise bear bar, if they do that, then yes, I sold and I made money, but I really didn't think this would happen. I really thought that we were in a nice move, although not so nice here, but still we were having some kind of gaps. That gap was beautiful. I don't know what caused this early. We were so close to the magnet. You know, it is what it is. I have to roll with the punches and trade what's in front of me. If I see a surprise bar like that, that's a give up right there. Bar 26, bulls just gave up there. They just throw their hands up in the air. I'm like, we're done. We're out. So what you do, they probably reversed so fast that it created this bar. And that bar is a gap bar, will get continuation. So 47.75, let's see if we can get that. We are now testing the midpoint of my area of interest. And, I mean, we came this close, might as well. We should get that 47.75. So let's see. We have a gap bar below the EMA and continuation. So it's possible that we might have an attempt to get back up to the EMA, but probably keep a bear gap. If the bears actually keep that gap open to the EMA, that means we get a very weak bear flag with maybe a 1 or 2 bull bodies, and then it would just sell right away. Okay? So be careful with that. We may not reach the EMAs after all. I mean, anytime you're buying against 1, 2, 3, 4 bear bars, all of them closed on their lows, that's a strong momentum for bears. That would become, if you're trying to buy here, that would become a minor reversal, and it may not go too far. You could end up getting a 1 or 2 bull bars, and then it could sell again, first into 47.75, then into my measured move target. Who wants that? You do not want to be stuck in that. So if we do get pullback bars, bears are going to position their sell stop orders, and they're going to trail it under every single pullback bar until they get filled with another bear bar. Yes, Bryce. Well, thanks, Brad. I was just looking at some charts last night. Of course, it's L's charts. When I get bored, I open it up, encyclopedia, and I'm like, what did he say here? Because he's got great notes there. He actually tells you exactly where to buy and sell. So more you look at it, more you remember. And every slide that I open, it says, trade stupid, trade stupid, trade stupid. And that right there is, this is it. They're giving up. So just sell that big close. Bar 26, sell it. Sell under it, sell the close, sell market, but just hit sell. Don't think about it. Put your stop here and try to get 1-to-1. So I try to remember that. I can't just sit here and analyze why did the bulls fail. They just failed. There's nothing I can do about it. I was really hoping they would get here, but my hopes and dreams, they never come through. So if they're not going to want to go there, then that's it. They started it. Here's the first sell and the second sell. And I said, look, listen, there's a bull gap here. And I'm kind of counting from here. The 10 point is right there. They got the 10 point. But once they close below that 11.75, 11 point and 3/4, that's a sign that they're going to get to the 14, 15 point and then the 19, 20 point zone. And then they breach that. So, the one thing that you don't want to do, be stupid and stay in your long because you basically give everything back. You don't want that. You see the surprise bar, you're done. Just hit close or reverse. Yep, bar 26 and 27. Especially 27. It's kind of, it's like almost like stake in the ground and saying that, okay, if you're still hoping that we're going to go back up, it might take a while. That's what it's telling you. So some bears might be taking profit here, covering their shorts because it happens to be that 50% I measured from this low to that high. But that's like a one little soldier against a big battalion of army here. I don't know. And it's not even an inside bar. I'm not really excited about buying that. It doesn't have a big bull body, so they're probably sell stops are positioned one tick underneath that. Now, bulls might be looking for some kind of micro double bottom to buy this, but again, I would not buy it. Because we could still continue to sell this into 36.45 area, 2 points below my measure, the gap, bear gap target, 3 bear bar gap target right there. I still think that's still the target. Now market wants to test open of the day because we're in a trading range, open of the day tick price and bar 10 lows. Why? Because there's a wedge where the pushes in the wedge, that's the push and that's the last push. These become the targets. We already got that out. Now we're coming for that one, which is right there. Or in between 11 and 10, somewhere here. So 47.75 in the bag. Let's see if we can get a little bit more continuation. But it's, it's got a lower wick, and you know why? Because they're taking profit. They know this was a bar gap in continuation, so they're taking profit. If they do close below it, so I'm going to get rid of this. They kind of breached it, so we might continue to come down into that area. Open of the day is smack in the middle of below bar 11 low and bar 10 low. So 36.45.25, 36.45 is target, and it also ends with 5. So we're coming 4 or 5 points from above, so we're probably going to bounce there. So yeah. So if you're still selling, it's also just around 40 point, because if you measure this, I measured it earlier and got rid of it, so I'm going to measure from here. The 40 point is right there. It's just about 44.25, but really, I'd say 39 to 40 point area, take profit area. So can bears push this down a little bit? They're still taking profit because of this 36.47.75. Well, once those profit takers get out of the way, we could continue to come down. And in fact, we should actually test 36.45, maybe even a little bit below with an overshoot 44.25. So where I marked is exactly where I think that we're going to test. All right, I'm going to end my session, everybody. There's one question here. Is 29 an example of a bad signal bar and will become resistance when we come back up? Bar 29. You mean bar 30? You meant bar 30, I think. Right, mister? Is mister in the... I think he's not, maybe. Oh, yes. Okay, yes, 30. And the name is Mo. If your name is Mo, why does it say mister? Okay, Mo. Well, that really is continuation. And take a look at the context. What did I say, right? So this area at that time, I had area of interest. So when the price gets there, it's basically, that's not really a bad signal bar per se. It's these bears covering their shorts. They just started to take some money off the table because they know this is a strong balance zone. So I don't think market try to create a trap there. Okay, it's just a pause. I don't think that's a trap bar. I don't think that's, I would not read that as a bad signal bar, because to me, that's not even an attempt to buy anything. That's just taking some contracts off the table, and therefore it's pausing and going for another leg down. Okay? So if we reverse, here's what I would look for. I'm going to get rid of this. So mark this 44.25 as your 40 point. I want to clean this up a little bit. I'm only going to leave this measured move target down. Now, think about it this way. If market came down and it made a spike, a little bit pullback and coming down, right? Where's that pullback? That upper wick of bar 28 is a pullback. So spike, pullback, and a channel down. So that's what I'm interested in. Maybe right there. Because if we do go back up, sellers are waiting, and I would love to sell that again. But that's one way to read it. The other way to read it, if I'm trying to find where can the bulls or the market pull back, because if bears think that this is too low to sell, they're going to want to sell the pullbacks. Look for breakout points, okay, starting. Like, this is a breakout point, right? And it went up and it sold. Probably sellers are there. They might try again, okay? Or as early as breakout point. Look, they just went up to that breakout point and they're trying to sell it. Bulls need a micro double bottom to reverse it. If this continues to reverse, I'm going to look to sell there, but definitely I'm going to look to sell there. So if we make a micro double bottom, bulls will probably try to get back up here, and I would look to sell there once again. But right now, on a micro level, this is where they're trying to sell because it's a breakout test. So limit order sellers basically underneath, one tick underneath bar 30. That's the significance. That's how I would read it. 52.25, they sold it. ATR is 5.99. Roll it down to 5.75. You can grab a 5 points and an extra tick. So take out, I can't do the math. I'm just too tired. Where's my calculator? So 5 points, that's 47.25. Add extra 2 more ticks, 46.50 maybe? So we could come down to 46. What did we test now? Okay, so we tested 47. Okay, 5 point was 47 from 52.25. You see how I'm doing the math? So that is 52.25, the breakout point. Limit order sellers jumped in, they sold it. Now ATR is 6, okay? So that means 46, right? If you take out 6 points, 46.25 becomes your 6 point, but you have 6.5 there. So I'm going to come down 2 extra points. 45.75 we could still test as long as ATR stays and doesn't go down. But since you have entry here with 1 tick and an entry exit, don't go for the extra 2 ticks. 46.25, just exit out if you're scalping. But regardless, they did come down to 47.75. Look at that. Now ATR came down, so I don't think this is going to go down further. It might, but this is where I would take profit and go flat. Okay? So if you were looking to sell with a limit order, yes, you can use bar 30, but it's not because it's a bad signal. It's because bar 31 is a breakout bar for bears. So you would look for a pullback and you would sell with maybe 1 time the ATR. Or you can take out half the ATR, initial scalp, and leave it to run. But you keep an eye on the ATR because it's going to change. If ATR goes down, you reduce your amount of profit taken. If ATR goes up, you can extend it out, okay? You can add to it. All right. You guys have a great day, and I am starting my weekend. What am I saying? And I will see you guys next week. New October subscription. Okay, so month of October. I don't believe we have the subscription yet, but you can go to price action, brookspriceaction.com/rose, okay? And over the weekend or Monday early morning, look for the subscription link, okay? And I'll see you guys next week. We'll post the schedule. I don't think we have the schedule yet. October, I have to give you guys a little bit of updates. I mean, I think it's too early to share, but the schedule towards the end of the week might change a little bit. I have to talk to Ken about it. I already did. We might post the schedule, but I have some health issues that I have to take care of. It's not yet decided, so some days might change. So you might want to come back and take a look at. But it's going to be similar to September probably. But I just wanted to give you guys heads up. Okay, so see you guys next week. Have a great weekend, and Brad will come in. So don't exit out of the webinar.
Thank you for sharing with everyone, Rose. Really enjoyed it. So one thing that Rose mentioned that's really important over here is about being in denial. And Al talks about Forrest Gump trading, and he calls it trading stupid. And the reason is you have to have a way to exit a trade quickly. If you're long up here and your stop's down here, that is a bad risk reward, because if you're buying up here, you're probably not going to get a measured move up. And when you start to see this, the quicker you can get, if you cannot get out quickly, you're really going to kill your math. So when you see this, especially when you see this, it has to be just reflexive, and you just have to hit, close the trade, sell the market if you're long. And as far as Forrest Gump goes, when you see this, Al, you hear him talk about in the room, he'll say, that shouldn't have happened. Sell the close, stop up here, and hold for a measure move down. So really important to, when the market changes, everybody has an opinion on what the market's going to do. And when it doesn't do it, you have to be quick to adjust with the market. If it's a small pullback bull trend and you think this is a gap and then this is a gap right here, and you're thinking that this may go test the open of the day. I thought we were going to test the open of the day. When we got this breakout here, I thought that this was a breakout of this trading range here, and my premise was we were going to pull back and let those traders out, but then go higher. I did not think we were going to do this though, but you can't be in denial when this happens. So what's going on right here? We're getting very close to the open of the day, and it's a very tight channel. First left's probably minor. The issue here for the bears is risk. Where's the, if you're short, if you sold this close, stop up here, or if you're still short, it doesn't matter. Or if you even sold the prior bar, where do you put your stop? Do you put it up here? Do you put it up here? And then you have to think about what's the risk reward. So if I'm short and I put my stop up here, am I really, 1 times my risk is the low of the day. Do I really think we're going to get to the low of the day here before we get up to here? No. If anything, I think the market's going to pull back. So if that's the case, you have to have a faster way to exit. That is why traders will probably, a lot of bears, it's reasonable to get out. They'll look to get out here and look to sell higher. The June low is right here. I know that text is kind of small. Let me see if I can make that just bigger. So we're probably going to get back to the June low. And let me just make sure that's right. Should be. Move that for now. Yeah, that's close enough. So some traders, as the market's selling off, they'll think this is a sellback and tested the June low, and they'll buy the June low. And where's their stop? At a minimum, it's probably somewhere down here. And they'll buy more lower and buy more lower. So that makes me think, at a minimum, we're going to get to this blue line, the June low. Now the question is this tight enough where we have to have a second leg down and get to the measured move target, open in this bar, close at this bar, and test down to here? Let me turn on my bar counter. Give me just 1 second. There we go. So I think we're going to here, but I also think we're going to here, and we're going to get to the open of the day. So for me, the question is, do traders, it's a give and a take. If you look to sell up here, you risk missing the second leg. But if you sell early, you may get a deep pullback. So right now, the most important piece is look to the left. I think Rose drew some boxes over here, but trading range here, drag that to the right, we're probably going to enter a trading range here. My expectation is we're going to form a bottom somewhere down here. I don't know if that's the 10 low, and it's possible we have to go lower, but the reality is we're in a trading range, and trading ranges go sideways. It's really important to start to see the day. Most days are a trading range, and most days are not. Even this, 3 consecutive big bear bars, probably going to get a second leg, but you should expect this is climactic, and it's probably going to lead to trading range price action. So the bulls, they want a double bottom and spike pullback channel, double bottom, and they want to test up to here. Tight enough bear channel, bar 33 is probably a pullback, and the bears want a low one short. With the problem though, with 33 being a bull bar, probably buyers down here and maybe a small second leg up. However, it is always in short, and it's probably better to look to sell a pullback than to be long. However, big up, big down, we could easily get up to here before we test lower. Some bears sold the 32 close. They will be disappointed, and they may look to get out. So they sold the 32 close, scaled in higher. They might get out break even on the entire trade. They may get out at the 32 close. Other traders will hold, betting on a test of this blue line, the open of the day. Let me draw that. So open of day, OOD. Open of the week, OOW. So testing the 32 close, probably we're going to get below the 33 low and the open of the day. Yeah, EF019 made a comment saying that we were in a trading range and the bears seem quite in control, and I agree with that. He says they say all the sell-offs are sudden, very strong, fast and deep, lots of consecutive bear bars closing below their lows, while the rallies are slow. Yeah, so he's saying they are saying buy climax, buy climax, buy climax. It's a wedge, 3 pushes, tried to break above the wedge, failed, and for the bears, 4 consecutive bear bars. I agree. What I'm saying, I'm leery of the bears because of this trading range price action. And the problem with the trading range is traders do not want to sell. They do not want to have bad risk reward after a second leg. So it's sell to close. Odds are you're going to get a second leg down. However, are you going to get a third leg down or a fourth leg down? And look where we are. What happened at the 8 low, the 11 low, the 10 low? What happened over here? Traders bought. What are traders going to do at the open of the day? They very well may buy. Some bears will sell betting on lower prices. But again, what about the June low? The issue with the trading range is traders are flexible and they use wide stops and scale in. So a lot of traders, they don't panic and they'll buy more lower. Now, I'm not saying that when you see 37, you should just say, we're going to come back to 27. You shouldn't look at 27 and say, we're going to come back to it. So I'm just going to stay long and just buy all the way down. You will have computer and algorithms do that. However, that is a very difficult thing to do and not really ideal. But what that means is, I'll give you an example. I do think it's reasonable we will test the 27 close. Therefore, I'm kind of envisioning in my head a mental note here, thinking, okay, this is a trading range day. Bears should be disappointed. I think it's reasonable we get back to here. So if the market starts to bottom, I think it's reasonable to look to buy betting on a test of here. Just like over here, I'm thinking that this might be a bull leg in a trading range, and if it is, we could vacuum down to the open of the day. Therefore, when I start to see this, I'm thinking, well, gee, we may go to here, but we may go much lower. And then when you see this and then this, we know we're going to the open of the day. So here you go, bulls, low one, short below 34. We went to the open of the day, and I meant the low. If I said low of the day, I meant the open of the day. Low one, short, bulls bought it. So now, what do you do if you're short? Are you thinking, this is exactly what I wanted, or are you thinking, gee, this doesn't look right? And where do I put my stop? Is it, do I put it above 31 if I'm short? Do I put it above 28? The reality is, I don't want to have a stop here if I think the market's going to go here and go sideways. Same thing up here. And the other problem is, do I really want to stop all the way up here? So you have to think about things in terms of risk reward. It's the same thing here. If I'm long, if I buy the 20 close and my stop's below 19, this is 1 times my risk right here. So stops here, entries here, risk is here. What's the probability price goes all the way up to here or it goes down to here? And it's not 60%. Just like I don't think the probability of the market going from the 32 close from here to here down to here is not 60%. Therefore, traders will take profits and they'll look to sell a pullback. Bulls know that, so the bulls will buy down here. 35, second entry buy, down, up, down, up. If you buy above this bar, stop below 35. You have to think about risk reward. And you have to ask yourself, what's the probability we go to here before we go to here? And I don't think that's 60%. Therefore, I think there might be more sellers above and sideways. But where are the sellers? The sellers could be all the way up here. So again, I'm going to keep this line right here as a mental reminder that this is a target for the bulls. And it's not, that happens pretty frequently where arguably it was not always in long on 26, and it clearly became always in short on 27. And it's common for the market to retest the always in direction where it changed. So I would not be shocked if we got back to here. And, some bulls bought the 19 low and they scaled in lower. So what are they going to do? Well, they buy the 19 low, they buy more. Let me do one thing. I'm going to get rid of that. I have this right here. And the reason is it's common for measured move targets, open in this bar to close of this bar, to go 50% of the way down, pause before it goes 1-to-1. I think a lot of scalpers take that trade where they sell this, they see this, they sell this close, and they set their target a couple of ticks above 50%, knowing that it's probably going to pull back before it goes down to here. Give me just 1 second. Okay, so this is what I was talking about. Back to the June low, consecutive bull bars, 37, 38, and you have to ask yourself, is the market still always in short? It probably is. However, this is a target. This blue line it is where the market became always in short. And some bulls would buy it and scale in lower, and they're probably going to make money. So again, in a trading range, usually there's disappointment. And when you get a move that's strong, this is technically 2 or 3 pushes down. First push, small pullback. Second push, small pullback. Third, or you can say first push, pause on 30. Second push to 32. Third push to 35. So 3 pushes, expect a few legs up. So the question here is, normally, when you test the moving average in a trend, you expect sellers in the second leg or a retest of the lows. But the problem here is this is not a trend, it's a trading range. Therefore, there's a greater risk that the market could have an upside breakout. It probably won't. However, the bears have not made money selling below a bar maybe since 34. And that's a problem. Excuse me. Testing fire alarms. Sorry about that. So I think we're going to have to get to here, but again, I don't know if we're going to have to pull back first. May have to get to the 34 high before we go up. Probably sideways for quite a few bars, 12 bars, 15 bars. So question real quick from, was bar 27 here always in short because we have 2 consecutive bear bars and it's below the EMA, the moving average? Do those conditions need to be met for always in short? Those are 2 conditions. And yes, the real issue, I mean, it's 3 pushes up, consecutive bear bars makes it always in short. And the way I look at it is, what would you do if you were long? So if I'm long and then I get, if I'm long and then I see this, I'm disappointed. I'm thinking possible wedge top, fail breakout of the 14 high, and then I get this second entry short. My probability is now even lower for the bulls and higher for the bears. And eventually I'm saying, okay, looks like the bulls are giving up, and then the bulls gave up here. So at this point, my premise is completely wrong, and I have to exit. It's real similar to find the day over here. It's like this. If you're long on the open, you bought the low of this bar, and then you see this, you're wrong. It's sell the close, and you got to get out. If you see 10, if you see 11 and 12, it's clearly by the close. It's clearly always in long. You have to get out, and the market's probably going higher. Sorry about that. Looks like the noise is back. It's done, and I'm back now. They were testing some alarms. Okay, so we tried to get up to the 27 close, and we've gone up, we've gone down. Trend line break from this sell-off, and we're just hovering around the open of the day. So, you know, just look at the past several bars and ask yourself, you know, it's probably always in short. We're holding below the moving average, but do you really want to sell right above the open of the day? You know, it's not ideal. So probably going sideways here. Okay, so let's see here. There we go. We're getting into that window, 12:30, 2.5 hours, give or take, left in the day, that we want to think about, you know, what are the possibilities? It's Friday, so greater risk of some kind of big move up or down, and it's also the last day of the month. So we could get a surprise move. Maybe we get, you know, I think if anything, I don't know, you know, the problem is, if I look at the weekly chart, obviously the bulls want to get to the open of the week. That could certainly happen, and it wouldn't surprise me one bit. The bears want to close below last week's low, which is, let me go ahead and just mark all this. Give me just 1 second here. So it looks like the low last week was Friday, the 23rd, which is also basically the June low. So as far as possibilities, I don't know. I think the bulls, maybe they want to get to the open of the week, but that is pretty far away. And the bulls are doing a good job. They're getting bull bars closing on their highs. They're getting a good bull bar here. The next question is, will this bar close on its high? And will this bar have good follow through? So it's got to break above the moving average. It's got to break above the June low. And, you know, the problem is here, it's tight trading range. So the bulls really need to do more to convince me that we're going a lot higher. You know, they've got to reverse all of this. And if it just goes up in a not that strong way, then traders may think about a possible wedge. something like this, 1, 2, 3. So the bulls need to do something strong here. The bulls want a neck, double bottom, break above the neckline, measure move up. We have to think about the 24 low here. Traders bought the 24 low, scaled in lower. They have not had a chance to get out break even. And if this is a trading range day, they should be able to avoid a loss. So you buy the 24 low, you buy more, maybe above there, and your break even is right here. So I do think it's reasonable if the market goes up to the 36.65 area. I said reasonable, and it's not a guarantee. Celtic Knot asked how much significance to the fact that the bulls keep getting higher lows. It's very significant. It forms a trading range. Bulls, higher lows. The bears, strong breakout, possible lower high, maybe a lower high up here. So if you think about it, it forms a triangle. We don't have a good definition of what the top of the triangle is, but right now we've got a big move up, big move down, and sideways. So that is important. And if you look here, lower high, we have yet to get above here. Some computers will say that this is a strong enough breakout for this to be major. The problem with that logic is if we go above the 40 high, it would probably just be more minor and continue to go sideways. Probably a bear trend or trading range. This was an obvious higher low, and if this was going to be a bull trend, this rally, the market shouldn't have gotten below the bar 19 low. Really important not to be hopeful. You look at bar 48, and it looks like it was racing to the upside, but then it fails to close above the moving average, fails to close on its high. It's so easy to just, hope to see a big move, see a breakout up or down, or you see this sell-off and you think, gee, there's no way we're not going to get a measured move down, and we get this. So when you get a breakout in a trading range, the follow-through is usually very brief, and it's not going to last that long. That's why it's very difficult. You get an upside breakout, and, here to here, but then you get a 50% pullback, and then you get a new high. Some bulls buy, scalp out. They buy here, they buy more lower, and scalp out. And the longer someone starts to trade, the more they realize how often the market goes sideways, and the more they just expect the market to go sideways. And the reason for that is they know that most moves are going to be brief. If you take all ways in, which is probably the single best way for a trader to start out trading, which is swing trading, they buy, maybe they buy the 5 close, stop down here, no reason to get out, and then they get a breakout here, no reason to get out, so they hold below that, and then they get an upside breakout, they get out on the second entry short, and that would be a good trade. But this is not as common on the open, and it would be very difficult. At some point, bar 10 was closing all the way down here, so a lot of traders, they start to realize that moves aren't going to go that far, and what do? Well, they start to buy and then buy more lower down here, scalp out, stay long, buy more lower, scalp out. And then maybe the next evolution of that is traders buy, scalp out of their full position, and they just buy more lower on a full position knowing that the probability is the market's going to pull back. So what do we got right here? We reversed 48 and 49, bear bar closing on its low. It rejected the moving average, and it's a credible sell below, but the problem with 49 is that you are in a trading range. And in general, tight trading range, after the sell-off, probability slightly favors the bears on the downside breakout, but not by much. So far, breaking below 35, breaking below the open of the day. We may have to get down to the bar 2 low and the bar 58 low. On the weekly chart, The bears want this week to close on its low. Monthly chart, let me pull that up. The bears want this month to close on its low, and they also want to close below the June. They want to close below the June low as well. So probably the most important price is the June low. And the bears want to close far below it. You have the daily chart. I've been saying, writing on the blogs, that the bears were stalling, and the bulls keep trying to buy. And I do think I really do think that the market's probably going to pull back with it before, sells off to the pandemic lows, let's say. So I think this will be a failed breakout. But my concern is how tight this channel is. And if the bulls keep trying and not able to get anywhere, they had a chance here. They had a chance for yesterday to close on its high. They had a chance today to break above yesterday and close on its high. And they're not getting it. So my question to the bulls is why do we only have one bull bar and have this many bear bars? It's a subtle sign that the bears are stronger than maybe we think they are. And it wouldn't take much. In a trading range, all it really takes, if you buy the low of this trading range, you're expecting a failed breakout. But what do you do if this bar closes on its low? Maybe you hold for one more bar, but then what do you do if the next bar closes on its low? So this could trigger a downside breakout. Probably won't happen, but it certainly could. It's like right here. If you buy this low, what do you do here? Well, you obviously are thinking and trying to decide, is this going to fail or is this going to succeed? So far, this bar looks pretty good. If I go to a 1 minute chart, consecutive, big bear bar, another big bear bar, follow through bar, another bear bar, looks like we're going lower. Testing the 10 low, going to test down here. I think probably we'll get to here. Bears sold the bar 2 close, 31.5. And you can see right here, disappointed on bar 3, never got a chance to get out break even. It tested the break even price. It didn't go below it. So we may have to get down there. I'll make this blue. And strong enough breakout, probably second leg down. So now for the bulls, they see an expanding triangle, 3 pushes, 1, 2, 3, 1, and 2. So it doesn't look perfect, but it's, close is close enough. They want some kind of, maybe that's the expanding triangle. It doesn't look that great, but it still works. The problem for the bull case is the size of this bar. This bar is getting pretty big. So let's see how this bar closes. It's really important to be patient. And this bar could paint a pretty big tail in the final seconds of the bar. So don't be in a rush. Don't be too eager. Wait for bars to close. And it's important to be a little skeptic. If the market's going to sell off, we're going to get bear bars closing on their lows. So good close, but tail below. Traders want to see follow through quickly, or else they may consider exiting, and the market could reverse up. Consecutive bear bars, probably strong enough for a second leg down, but the bears need follow through. The market's deciding if we have to get down to the bar 2 close, and I think we do. But we could get a pullback first. The open of this bar, it looks like it opened on its high, so traders immediately sold the bar. That is good for the bears. Again, the market's deciding on the follow through here. Bears, they want a double top, break below the neckline. Here's the top. Maybe this is the neckline here. Measure move. We're 50% of the way there. Another measure move target would be 100% down to here. Although this bar is stalling at the low of the prior bar, there's not a big tail above the bar, so that is a good sign for the bears. And that's a subtle sign that the market may go a little bit lower. question though is traders that sold the bar 50 close, are they going to scalp out or are they going to hold short? So it looks like the bulls are giving up. Probably going to get down to the 2 close and maybe the low of bar 2 as well as the low of yesterday. Bears want to get on, they want to test the low of the week. So this could certainly lead to a downside breakout. This could certainly lead to a downside breakout. But let's see how this bar closes. The stronger the close, the higher the more likely the market will go lower. You have to ask yourself, if you were a bull that bought the 46 low, I'm going to remove this move target, but if you were a bull that bought the 46 low or 35 low, what are you thinking right here? Are you thinking, this is exactly what I wanted, I'm going to buy and scale in lower? Or are you thinking, gee, I should have gotten out here. This is not good. You're thinking the second one. So not ideal for the bulls. For the bears, 3 consecutive bear bars, always in short, probably getting at least a second leg down, so it's sell to close. But this may just be a sell vacuum, test of the bar 2 close. It could also break strongly below bar 58. Would I be surprised if we sold off to the 2 close, formed a double bottom, and reversed back in this range? Not at all. Would I be surprised if we sold off aggressively, far below bar 58? No. Again, you cannot be surprised about anything. The market was deciding right here whether to reverse up or whether to sell off. And at this point, the market made its decision. It kept trying to break above, tried to break above here, and failed. And bears got a bear bar closing on its low. Bulls got out, bears sold. It's also a triangle. So it's 3 pushes here and here. And it broke to the downside. So again, I just cannot stress it enough. You have to be totally unbiased. And you're going to have an opinion and you're going to be wrong. I thought we were going to rally up to here. I thought we were going to get to this close. I was wrong. Does that mean I'm buying the closes here and here, hoping we get here? No. It's just a viewpoint I have. So for me, I didn't sell here. I didn't sell here either. But you have to just, you cannot be biased. And when I see this bar going down, I have to be thinking, gee, bar 50, that shouldn't have happened. I should sell the close and give the market a chance to go lower. You can't be in denial. I think it's really, Rose talked about it. You hear Al talk about it all the time. And really good traders, whether they're very analytical, like somebody like Al Lee, where they're very, programming based and want to put a lot of logic, which is a wonderful way to trade, or whether they're Al and they use more of a system-based approach in their head. Al has very simple ways of saying, always in short, I gotta sell. Always in short, can't buy, gotta sell. And that's just his way of eliminating decisions. And you've heard Al mention Albert Einstein. Albert Einstein, he thinks, would be a bad trader because he would try and think, about too many variables and he would never take the trade. We could look at a 15-minute chart and try and figure out what to do. Do we sell this close now? It's 15-minute chart. Do we look at a 10-minute chart? What about a 7-minute chart? The point is, when you see something that looks good enough, consecutive bear bars below the moving average, you just have to sell. Or if you see, consecutive bull bars, probably going to test up to here, you just buy, where you buy this close, and you just put your stop in the right place. I think the first step for someone to becoming more profitable or more consistent is, for one, trading small enough to where they don't care about the position size, and 2, you have to just put your stop in the right place. The first thing you have to do is get in the right direction. So in other words, big bull bar, just buy. Put your stop down here and hold for a second leg. And the longer you do that, the better you'll get at understanding when to get out. And then you'll learn that, should I buy this close? Well, maybe not, because this is the third push up, and typically third pushes fail a lot of times, aka a wedge. And then you learn, hey, this is selling off, I should just sell and put a stop up here. And, Al says go for a walk. And the reason he says go for a walk is, what he's saying is, jump off the high dive, so to speak, get short, put your stop up here, and just hold. Same thing here. You just sell, put your stop up here, and you just hold. And the most important piece is to trade small. And, try to eliminate decisions. One of the things Al does is, and it traps him out of a lot of trades, is he will not typically buy in a tight bear channel, even if limit order bears are making money. So why is that? Well, the reason is, in a tight bear channel, he wants to stay in the thought process of looking to sell because it eliminates his decisions. That's another thing. It's really important to find a way to eliminate the amount of decisions you have to make. And the reason, there's a lot of decisions with trading. And the first piece you got to get good at is understanding how to just read the market. And then after you can read the market well, the other problem you have is entering orders, not making mistakes with orders, not trading too large, not getting emotional. And one thing I think that's real helpful is, and a good test of your ability to think is, don't trade for a full day and watch the market. And what you want to do is just practice, make a decision where you're not going to trade, even simulated, and force yourself to just be a spectator of the market. And by doing that, you'll just look and say, okay, the bulls are doing this, they're buying, trying to get a second leg up. The bears, trying to get a failed break out of the double top. If I was doing that right now, I'd be saying, okay, bears are trying to get a strong breakout, 3 legs down. The bulls, they want a higher low here, but this looks strong enough for a second leg. And the point is, it's a way to practice just thinking. And because part of the problem with when you start trading is there's extra variables you have to think about. And then there's the emotional battle you've got to deal with kind of shutting off your emotions and just not caring. And that takes a long time. So look where we are. You see this blue line? We're bouncing and testing the 2 close. So why are we testing the 2 close? Well, or why are we bouncing? Traders, in theory, they sold this close and they scaled in higher. Maybe they sell this close and they just use an extremely wide stop and they sell below this second entry short. And why that second entry short? Well, because that's arguably a credible stop entry short. Some traders may just sell the high of the day. They sell here, they sell the high of the day here. And let me do this real quick. There we go. They sell here, they sell more above this high. And look what bar 10 did. If I sold this close, sold more of this high, that allowed me to get out break even. Other traders, other bulls, they know this is probably a sell vacuum, and they know that there's probably a brief window to be able to buy the 2 close and scalp out. Now notice I said brief window. That does not mean that one simply just buys the 2 low down here and just holds long. No, it's a scalp for a couple seconds. It's, look at a 1 minute chart. It's buying a few ticks down here and you're already out and the trade's over. Other bears, they know that. So what are bears going to do? They're going to look to sell where those bulls are getting out. So really important to just be patient. And the longer you trade, the more you start to be able to think through things and understand things and not get disappointed. Someone sells 52 and they think, oh, this is so unfair. How is the market racing up like this? Well, it's the 4th consecutive bear bar. The bodies are getting smaller, and it's a trading range. 2 pushes down, tight trading range here. Guess what? We're probably going to go back. I still think we're going to get back up here. What I don't know is, are we going to have to go below the 2 low and test lower? So, again, important to not get disappointed. So, we have a micro channel. First up probably will fail. For the bulls, 2 legs down and a trading range. So the bulls want to disappoint the bears here. And that's a good disappointment bar. And it's probably not going to reverse the market up, but the bears' expectation, the bulls' expectation, is to cause enough disappointment that traders may look to buy down here and keep the market from going sideways. In other words, they want the market to do this. Possible trending trading range, where we go sideways here, break to the downside, go sideways here, and then fill this area, which is also the open of the day. So I think this price level, 64.45 area, and this green line will be very important later. But let's see how this bar closes. I still think that the bears probably have to get a second leg down. So the close bears 52, disappointed, probably will get out break even. Probably will be able to get out break even at a minimum. For the bulls, some bulls bought here, bought more lower, maybe a couple ticks above 2, somewhere in here. That's the midpoint. So some of those bulls are getting out break even here. Yeah, I want to say something that Napster just said that I really like what this person said. Most is about building good patterns and habits in life or trading, which is difficult, not as simple as it sounds. Myself struggling on this toughest journey. Yeah, I think everybody struggles with that. And for me, I'm kind of hard-headed, so I think I did a lot of more dumb things. I did way more, I think, dumb things than most people, such as I would scale in, and I've done this before 1,000 times, but just buy, and I would say this, and I would scale in, and scale in, and I would say, oh my gosh, this is way bigger. This will be a way bigger loss than I thought it would be. I can't take that loss. And what would I do? I would hold long, and I'd have the chance to get out here, and I would know in the back of my head, get out, just get out. And the next thing you know, I wouldn't do it, and price would be here. I mean, I think everybody's done that. And that's an extreme example, but the point is, for me, I did that enough times to where I learned that's an extremely painful mistake. And the more you learn, and eventually, you'll either, I heard someone say this a while back, you either learn from those mistakes or you'll eventually just stop trading. And the good news with trading is, I really don't think you have to be a genius. I don't think I'm that smart of a person, and I don't think a lot of people are. I think everybody's IQ is pretty close to the same. And the point with saying that is, if you just stick with trading and just keep trying, eventually you're going to figure out the dumb mistakes. And if you just hold, you keep, just ride the pain out, so to speak, your experience will make up, and you'll just start to learn what to do and what not to do. And you're still going to make mistakes, but you at least start making a lot less mistakes, and you start making more of a profit, and it's kind of a give and a take. At first it's you lose every day. It's a great day if you just broke even, or it took one good trade. That's a good day. And then it eventually starts to morph into, you break even every day, and maybe you lose occasionally, but you're not making anything. And then it turns into your expectation is to make money, and if you break even on the day, you're frustrated with yourself. Your level of expectation towards how you're playing the game of trading, so to speak, goes up, and that just takes time. So for the bulls, they went one tick below the low of, 1 second here. They went one tick below the 53 low and turned up, so they met the minimum definition of a second leg down with 52. That was my minimum expectation. Sell to close 52, traders would scale in, and they should be able to avoid a loss. They avoided a loss. Now the bulls have a second entry buy. And the reason I said that, although 53 looks like it's not a great close for the bulls, It's a good bar for the bulls. And the reason I said that is 53 was probably strong enough that traders would be more willing to buy the low of 53. So if I'm a bull or a bear and I see 52, I'm thinking, gee, that's disappointing. Maybe I should just look to get out of the 52 close or the 53 low. My expectation is not a rally. It's just we may bounce there. And that's partially what happened. Some bulls bought the 52 low. They bought the 53 low just now, and they scalped out. But if you're buying the 53 low, it's kind of like buying the low right here during 53, buying the test of the bar 2 close. You're buying, scalping out. If you bought the 53 low just now, a couple minutes ago, you bought it and scalped out of the trade. That's what your goal was. It is not you're not holding for dear life. That's part of the problem with scalping. Traders have to realize is you're buying for a scalp, you're buying and then getting out. It's getting in, getting out. It's kind of like it's a very fast move. If you're swing trading, you want a good stop entry, you want a good everything, just like right here. You're not, and this is kind of an extreme example, but you're not going to buy the 33 low and then say, okay, I'm going to set a target up here. You're not going to hold all the way to here and then just, keep holding, and go down here. So, Huntsman PDX said, if trading range day could bar 49 and 53 be a second leg trap? Sure. 49, 53, so 2 legs down. 1, pull back, 2. Test of the 2 close. Double bottom. It certainly could. And, I still think more likely that, let me repeat that. Let me back up. This could be, we could easily go up to 36.50. I think we're going to probably end the day somewhere over here. But strong enough breakout, it lowers the chances of this just being completely a second leg trap. The bears got a lot of follow through on 50 and 51 and 52. A lot of second leg traps are kind of, let me find a good example. They're like this, leg 1, pull back, leg 2. Or, let's see another one. Maybe like this, leg 1, pull back, leg 2. It's just a fast move. And it's an emotional move. That's kind of the second leg. It's nested, but leg 1, pull back, leg 2, nested in the 2, and then sold off. Or, we can talk more about that later. I don't want to get too sidetracked on the price action. So the bulls, what happened here? Well, the bears had a low 1 short. They tried to break below, but they couldn't get below the blue line. And some bulls bought for a scalp. Other bears, in other words, I don't want to sound confusing, so I'm trying to pause and not talk too fast. 64, some traders, if you think about it, the current bar just let traders out. So traders that bought the 64 low, as crazy as that seems, and scaled in, they were able to get out, and they probably were disappointed here. The bears, they want a breakout below 53, and until they can get a credible stop entry closing on its high, they being the bulls, the bears have a reasonable chance. I still think we're going a little bit lower. I would like, I'm trapped out because I really don't want to buy down here, even though we may go down to here. This part concerns me, for lack of words. I really don't want to buy late in a move after 2 legs down and possibly a second leg from 52. I don't want to sell here. Excuse me, if I was saying buy, I meant sell. And that doesn't mean that it's a bad place to sell. If you're trading always in it, sell the close and your stop's probably above 53. But it's a leg in a trading range. It probably is a leg in a trading range, and we may not go that lower. The problem with everything's a give and a take. So if you want to catch the entire move, there's going to be a lot of times you're going to have to give up profit or take a lot of losses. If you want to scalp, you're going to miss a lot of moves. You cannot have both. It's just the trader's equation. If you want great risk reward, it lowers your probability. If you want high probability, you're going to have bad risk reward. That's just how the trading game works. Well, so the the Bears, they got their second leg down. And yeah, I'll show some encyclopedia chart patterns here in just a second. So 2 legs down, second entry buy, and now all of a sudden I'm confused. I expected lower prices to close at 52. Well, my expectation though was a second leg, and a second leg could literally just be 1 tick below 53. We got that. We got that. Now we're getting a second entry buy, and all of a sudden I'm confused again. So what do I think is going to happen? Whenever I'm confused, I default to trading range thought process. Trading range is I always make that my fallback. If I'm confused, the day's a trading range, automatically. So open of the day, if it's a trading range, I'm expecting everybody that bought to make money or avoid a loss. Therefore, open of the day, my expectation is we get there. That doesn't mean we will get there, but I think it increases the risk. And with this being strong enough, I don't want to necessarily buy though and risk here to here. I also don't want to sell because we may go up there. We may get up to here. So I am trapped out. So MR says, but we have an open gap, 49 and 50. So he's saying this breakout open gap in these bars, should we not expect further down? Well, that's what the Bears want. The Bears want this gap to stay open. They want a double top, break out, maybe a measured move. Whoops, 1 second. I've got a large monitor with 2 computers on the same monitor, and I've got a keyboard connected to both, and sometimes they hit the wrong key. That's why you'll randomly see me type on the webinar screen. It doesn't make any sense. It's just a Bluetooth setting. But anyways, we have a gap here. The Bears want a double top measured move, and they want something like this. We're almost there. Maybe if this is the midpoint, takes us around the 2 low. But gaps, if you think about it, a gap's always open until it closes. So yeah, we have a gap, but if you sell it, what do you do when the gap closes? So that's my thought process on that. Low 2, but bull bar, if we trigger below it, so not ideal. If trading someone else, I think we already answered that one. So give me just a few minutes. Well, there you go. It happens right after I'm talking about it. So that's a problem for the Bears, and that means we're probably going to close this gap. I said earlier, let me pull up some encyclopedia charts here. I talked about a potential trending trading range situation with bars 32 and 48 being the top of a range, bear breakout on 52, and then sideways and forming a larger trading range. So let's look at some of that. That may help people for a second. I always forget where some of these are. So maybe something like this. It's not exactly, but it's pretty close. And the point is, sideways, bear breakout, sideways, and we tested it here. So same thing. Triangle, downside breakout, sideways. This is a little more extreme. Maybe this is kind of closer. Sideways, bear breakout, sideways. So what I'm getting at is, ignore all this. We have sideways, bear breakout, probably going to fill this area and close somewhere in here. Probably going to get to the 3650 area. So Target for the bulls to open of the day, this gap area, apex of this triangle, and maybe the June low. But, we'll see. Monthly chart, very impressive. And now, look at this. We're closing below the June low. So that could be, ultimately, I think the June low is the most important price. And I know if you look at the Globex session, it's going to be a little different, but this is the day session, and trade session has it 81 bars, so this is what it is. For the bulls, micro channel, low 2 short, low 1, low 2, big bar, so big risk, small body, so doji bar, not an ideal short below. There might be more buyers than sellers below. The bulls want a measured move. So, and no surprise, take shift here. The bulls, they see a bear flag here and here, so 2 legs up after a bear breakout. Leg 1, pull back leg 2, they want a measured move up. Okay, do you see what just happened? Look what happened at the 59 low and the 54 low. Traders sold below 54, disappointed on 55 and 56, disappointed here. Sold more higher, got out, break even. So you sell below this bar, maybe you sell more higher, maybe you don't, you get out, break even. That is a warning that the market may reverse up. It's a warning, not a guarantee though. The point is, when traders start buying back shorts on the way down at original entry prices, it's a sign they're not willing to buy more lower. In a strong move like this, traders are happy. They sell and they'll sell more. They build up positions. They're happy to sell more lower because that means the market's going down. In a trading range, traders become cautious and start selling above bars and taking profits on pullbacks. They sell more higher, sell more higher. They take profits during this pullback or this sell-off down here. Okay, so I took second entry short, went further than traders thought. Second entry short, bear bar, traders sold, but looks like they scalped out on the way down. And this is not what you want to see if you are shorting. So traders might be bears buying back shorts and aggressive bulls buying on the test of the 2 lows. So probably more sideways here. 3 consecutive bear bars, 3-bar micro channel, might be sellers above. But again, it's an expanding triangle. 1, 2, 1, 2, 3, so probably sideways here. 61, good bar for the bulls. But 3 bear bars, forcing traders to buy in the high of a tight trading range. Another failed breakout of the bar 2 close, this blue line. Well, I think we're going up to here. The challenge is risk reward. So probably better not to do anything. So Ray Game asked a question, based on your experience, is it a good idea to have a goal of a certain number of points per day? And when you reach that goal, just stop the day and keep on trading all the setups that day. I think it depends on the person. I was always pretty resistant to that. But what I never wanted to do and still don't want to do is I like to see it more as how you're feeling. In other words, do you feel energized? Do you have a lot of energy? Do you feel like you're reading the market correctly? To me, that's more important than the points per day. Because part of the problem is, especially when you're starting out, is when you make mistakes, you can learn from those mistakes. And part of my problem was if I only traded an hour or 2 in the day and then stopped, I'm never going to learn from mistakes. But if I can make a lot of mistakes, I can learn from it. So I took the opposite approach. Again, I'm stubborn, but I don't know if did that help me or hurt me. I like to think it helped me more than it hurt me. But as far as points per day, when you should stop, you got to have a cutoff for, most traders should never it's hard to do when you have a small account, but you have to have a way to stop trading if you're losing money. I mean, you can't lose 10% in a day. Obviously, that's extreme. That's beyond extreme. But maybe that's in a perfect world if you can risk less than 1% a day. Maybe if you lose 3%, you stop. But even that's quite a bit. So that's the challenging part. As far as I think for most, the longer you do this, the more you start really risking less than 1%, and that doesn't become as much of a worry. But for me, currently, I like to view things in terms of energy. There was a few weeks ago where I was really, really tired. I didn't sleep well, and I took one trade. I don't remember what day, but it was pretty early in the day. Maybe bar 7, bar 8, made a small scalp and stopped trading for the rest of the day. And the reason was, the longer you do this, the more you can kind of feel your energy and kind of feel how in tune you are. And that's an important thing to do. You have to check yourself as far as, especially if you're trading more discretion, you have to check yourself on your energy and how well you're reading things. And if you feel good, then you can keep trading. But, I think it's also pretty common for people to, when they make a certain amount of points per day, or they, maybe they have a dollar amount goal that they'd like to ideally make. I think it's more common for those traders to slow down. I'm sure if you asked Al that question, he would say the same thing. You're not going to, if you make a certain dollar amount, you might be less resistant to keep trading for the rest of the day, just because you've made that profit. You're more tired in the day and you don't want to give it up. But I think it's more just an energy level more than anything. The main importance is the trade you're taking. Are you taking good mathematical sound trades? If you notice that your trades don't have good math and you're being sloppy, such as you're buying the close of 28 when you shouldn't, then you should be breaking some sort of internal rule, which should tell you to you need to calm down with trading. That's another great thing with trading small, is when you trade small, when you have the ability to trade even really small, that's why I'm a big fan of the SPY, if you can get over the pattern day trading rule, is you can risk whatever dollar amount you want. So if you're risking $50 a trade or $100 a trade, and that is small to you, and maybe you have 1 or 2 bad days, well, you could start risking $20 a day. And you could keep trading and dial down on the I don't care size. So hope that helps. 62 outside down, almost, not quite outside down, but same thing. You have a lot of overlapping bars. And we are trying to form a measuring gap. Right now we have a measuring gap this low and this high. Let me just make that more clear here. This is a measuring gap. I'm going to make it blue. Here you go. So if this is the measuring gap, that increases the risk of some kind of measured move. Maybe this is the target, this high, this gap, and maybe it's right there. So I still think the market's deciding on getting down to the 2 low in the low of yesterday. But really hard to sell. For me, it's really hard to want to sell down here when there's this much buying pressure. Let me try something here real quick. Someone mentioned SIM. So 63, big bear bar, a little bit of a surprise, testing the 58 low. 1 second here. Big tail on 63. While we may go a little bit lower and we have a measuring gap, 35 high, 35 low, and 58 high, probably buyers somewhere down here. It's possible we break sharply to the downside, but I do think there's more likely buyers down here. The reason I turned off the screen is someone asked about, do I still use SIM or look at it? And that reminded me about maybe taking 1 or 2 simulated trades here. Give me just 1 second. I'm having to manage something that's getting a little difficult to talk while I'm doing that. So just give me just a few seconds. Yeah, so I'm contemplating. I built a workspace. It's in a demo, and I want to make sure that I don't want to share anything that I shouldn't share accidentally in terms of, but that shouldn't be an issue. So I will try and maybe do a few examples of sim trades, but I want to look at a few things first. So this is what 63, big bar, probably buyers below. 64, the current bar in a bigger bar, but consecutive sell-climb axis, 1, 2, 3. Obvious support, the low of yesterday, basically. And we're probably going up here before we go a lot lower, so it's probably buyers down here. 3-bar micro channel might be more sellers above, but this is getting pretty exhaustive for the bulls. So I think we're going up to here, but may have to pull back a little bit, retest the 58 low first. So for bears, always in bears that are still short. Yeah, I don't know. I'd be flat now, but if those bears are short, maybe they get out a couple of points above the prior bar high. To me, this is just too climactic for me to be short. 3 pushes down. I think we're going back up to here before we go a lot lower. Yeah, Love Money, your comment, you said, can you explain more about measuring gaps and what is it, how do you play it? Well, what it is it traps traders. So if you think about it, if the gap closes, that means limit order traders made money. They buy the 35 low. Let me do an easier example. They buy the 52 low, price closes the gap, they made money. They buy the 35 low, and they get trapped here. Maybe they scale in lower, and they were able to barely get out back at the 35 low. So that makes me think the traders that bought the 56 low, the 60 low, the 62 low, and scaled in lower probably will make money here. That's how measuring, but what you have to be careful about is when you get measuring gaps, find a good example, they can create small pullback trends. That's extreme. But here's a good example. Below this bar, high of this bar, creates a gap, we go higher. Below this bar, high of this bar, barely closes, but the channel's so tight, measuring gaps trap bears selling above bars and force them to buy back shorts. Selling above bars and force them to buy back shorts. So this is my problem with being short here is consecutive sell climb axes and probably not going much slower before we pull back. Far from the moving average, probably we'll have to get there. For the bears, 65 low and short, 5-bar bear micro channel, but probably buyers not far below and probably going into 60 low. Look at this from a 15-minute chart standpoint. When you look at this, are you saying, even the Globex, what's bottom? But when you look at this, are you thinking, this is really strong? And it is. And it's possible we break and go for a measured move. But at the moment, I think more likely we're going to go back into this range. So probably the bears are probably going to get disappointed down here. Probably buyers not far below, but micro channel. So it's possible the bulls get trapped, although I don't think they will. It's on a smaller time frame, maybe a 1-minute chart. too. This kind of works. Sell the close, deep pullback, market's retesting the low close, and traders are deciding whether or not to get out. Maybe a three-minute chart shows it a little bit better. Big bear bar closing on its low, traders disappointed, possibly getting out break even. So every tail is on some time frame, the low close of a bar. And on another time frame, this is a breakout pullback short. Getting in the final hour of the day. So, and it's Friday, close of the week, close of the month. It's certainly possible that the market has a surprising bear breakout. Although I do think this sell-off will be limited. I could definitely be wrong, and we could break the downside. 3,600, that's a target, but that's pretty far away. And that's probably too far for today. The problem the bears had is this sell-off started on round bar 24, and we're on 64. So this sell-off has lasted 40 bars. And you have to wonder, how much longer is this sell-off going to last? Probably not much longer. And the other problem is, for this day to close on its low, that means the market has to stay down here for another 18 bars, something like that, which will be really difficult. That makes me think the market's going to have to go sideways up soon. It's the same thing as if you get a sell to close rally before 12:30 Pacific time or 2:30 Central time. It's really difficult. If you get one before, it's difficult for the move to last all the way into the close. So probably forming an early trading range here. Bulls making money buying the 65 low, scaling in lower. Some bulls, they bought 58, bought more lower, and they're getting another opportunity to get out here. So probably going to bounce. So second failed breakout below the 58 low. Micro double bottom, down and up on 64, down on 66, up on 67. Looks like the bears may be giving up here, and we're going to the 60 low. Trading ranges, it's really common where you get bad signal bars, you get reversals, and even though it's a micro channel, so it's a micro channel from the 61 high to the 66 low. That's why V bottoms, they don't really exist. And, even here, if the market sold off and this bar reversed all the way up to here, it really would not be a V bottom. Just like this is not a V top. 3 pushes because it's 3 reversal attempts. Reversal attempt here, reversal attempt down here, another one here. This was a reversal attempt up. This is the second reversal attempt. So, easier to see on the 1-minute chart. So for bears, again, I mentioned earlier over here, traders probably exit a couple points above this bar. They would do the same here. You can't stay short and if you're selling, you can't stay short and get out up here. That's just not good math. One thing you can do here is some traders will do this and maybe they'll buy. Oh, hang on 1 second. So they'll buy, and this is just an example. And strong enough breakout second leg, they'll target the high of this bar at 11. I don't have my default things set up. I may mess this up slightly. But what I would do here, buy this close, target the high of this bar, and I'm willing to buy more lower, so 32.5. I'll just put it right there. Please don't follow this. This is an example, and I'll explain something in a second. And again, this is a simulated account. So it's not real. It's just an example. Traders will buy this close, and if they're disappointed, they'll get out break even. but they're confident that this is strong enough for at least a second leg. The second leg. And the reason for that is strong enough breakout. Bears that sold are trapped, and they would look to probably, even if it pulls back to here, they would buy more down here. Not ideally doing what I want here. But I'm not that worried. It may be at the midpoint, so some traders, maybe they look to buy a little bit above the midpoint, so they might buy one right there. And again, this is just, I'm just showing an example of how one can scalp. So their stop somewhere down here. And again, this is sim, it's not even real. An example. Just an example of how someone would manage a position. So now I'm long 2, and depending on how this bar closes, I might just be quick to get out break even, or still that on the second leg and a test up to here. Traders sold this high, trying to probably get out break even. So disappointing close, probably buyers below, and a second leg up. Some traders will get out break even on the close, which I could do right here. But I think we're going to a new high. I think we're going to get back in this range. Therefore, I'll just get out right there. Now, if this was not later in the day, after several consecutive sell climaxes, for one, I'd be less willing to buy right here. And really, I just want to show an example of being able to scale in. And if this was earlier, like over here, I would be getting out just right here. Few ticks profit, few ticks loss. But I'm okay with where it's at this second. I really have a way to make the screen much bigger. So bulls buying 50%. And you can see I bought one more, so now there's 3. The reason I did that is I'm betting that the market's going to go mostly sideways here. I'm having to multitask on my other computer because I'm in a position. So, give me just 1 second. There you go. 3 pushes down. Bull's trying to get a buy signal bar. I'll come back to this. But 3 pushes, buy signal bar. Probably going to get back up to here. Probably still going up here. You know, I really should have probably done this on something like the SPY. I don't want to give people the impression that they can, you know, this is a lot of risk for someone. So I really don't want to, you know, you've got to be very comfortable with if you're using a wide stop, and really it's not ideal to do that this late in the day, but I wanted to show an example. You really shouldn't, you have to be very comfortable with that risk. You know, that is you have to be okay with being able to lose that, you know, 238. And especially if you're not comfortable with it, you can get paralyzed when you see the prior bar and thinking, oh my gosh, it's going to go lower. When the reality is it's probably going to fall below it and find buyers. You know, it's a trading range. And if it doesn't go up, it's probably going to go sideways. And often traders that buy up here, they're going to buy more lower, and the market is probably going to go sideways here. I'll come back to it. Let me actually just do this before I forget. I need to see something on the other screen. So the bears, basically a breakout pullback short and 2 consecutive bear bars. They want a second leg down and a successful breakout below 58. And it's possible they get that. But after sell off here, more selling here, consecutive sell climaxes, probably going to go sideways up in here. $60-minute chart, kind of nested wedges here. So 1, 2, 3, 1, 2, 3, 1, 2, 3. Better like this. Go back to here. So really, probably should have just gotten out when this bar went up and started to turn down, and should have just gotten out break even right there. But kind of challenging to multitask. Don't want to show an example. So 3 pushes down. At this point, the market's probably going to test up to here. This is really more aggressive than I want to be, but it's just more or less. I wanted to show an example and one way you can manage a trade. I think it's kind of, I'll be honest, I think it's kind of dangerous. It's more risky to do that late in the day. And this is the other problem with buying too high. You really want to be able to scale in and build into a position because it gives you more flexibility. You have to be very careful. And even the first entry, this wasn't that great of a buy right under the moving average. But this is kind of an example where you can typically scale in to avoid a loss. You can see right here, bear sold to close, disappointed 70, maybe trying to get out break even right here. Bears are still trying to get the downside breakout, but with a lot of buying pressure here, so probably going to reverse. But you can see on the monthly chart, really good looking, finish to the month. So the way I'll probably manage this is I'll probably get out here, and if this races up, maybe I'll get out up here. Yeah, Suki, I have a monitor connected to 2 different computers. So you'll see my mouse go left to right often. I'm switching from one computer to the next. But yes, I have 2 trade station platforms open. And again, the screen you're seeing is a sim trade demo. Sim. So again, this isn't, sim, it's not real. I just want to make that clear. And this is an example of how one can manage a trade. It's not an example to follow along. Again, please don't follow this trade because, for one, it's easy to mismanage this. Yeah, I just did, again, I did 3 micros. I just wanted to do, and I should have just done something like the SPY. But since most people are watching the E-mini or the micros, and all of our stuff is already plotted, I just did 3 micros. And if I was going to show an example with the SPY, I would have done, maybe 10 shares each or 5 shares. Again, the point's just show an example. And this is still pretty late in the day, so not ideal. So the bears still trying hard to break below. Trying hard to break below. and starting to form a tight trading range. Might go a little bit lower, but still probably going to go sideways here. So I just bought one more lower, and again, I'm having to kind of bounce back and forth, so this is kind of distracting. And again, I'm just going to let that, I would manage it a little differently, but to be honest, I'm in a position on the other computer, and obviously that's more important to me at the moment. One thing you could do is maybe do a half size. So I do this pretty frequently, where I'll break my position into two pieces, and the close is 77.5, so I'll get out right there, and then maybe I'll get out of the second portion up here, something like that, and then I've got two left. I'm going to move that to break even, which is basically right here. So that's the target. Okay, I'm out of my other position. So I'm just going to get out. So I got out of that. So again, that's probably the single biggest challenge with trading is you have to be willing. You have to be careful about buying too high in a channel, because if you do, you're better off to buy more lower than to simply exit below. Notice if I would have bought here and got out below 66, then if I waited for another entry, I'd be buying all the way up here. So that is the problem. Bears selling below 68, sold more. Maybe they sold more higher. If they didn't get out here, they had the opportunity to get out here. And I'll do more, that was kind of more of a, again, it is a little, I'll be honest, it's a little weird, being on a webinar and doing that with you guys. But that was kind of a practice run. And I'll do more of those kind of examples. But I mainly just wanted to try it and just see how, how that went. You can see what happened. Bought on the way up, disappointed, scaled in lower, getting out, break even. Bears, sold on the way down, disappointed, getting out, down here. And you got to give it to the bears. They're really, this is still a negative gap. So I'm going to get rid of this. And do this right here. You got to give it to the bears. Measuring gap, another measuring gap. Even though it technically closed, it's still a negative gap. Again, this is slightly problematic for the bulls. I've been saying, and I still think this is going to fail. I still think we're going to fail here, but you do have to wonder. You do have to wonder if the bears might succeed. Even if there's a 35% chance, that's still very real. And if they do succeed, it could be quick. The pain trade, it's kind of like, well, let me do it like this. I'm just going to close this. We'll use it another time. So if we break below this, a lot of bulls could give up and we can really race off. And with the bears, that is a very impressive bar. And that's a strong bar. And it does make you wonder if, do we have to get down to the pre-pandemic high? And we very well could. This is probably extreme, but measure if this is a breakout point, probably wouldn't be. But tight trading range may be a final flag, so maybe we have to get, down to here. Again, I don't think we will, but that's the apex of the triangle. What if we broke all the way down to here? More likely, 3 pushes down, maybe a little bit more down, and then bad follow through on the next month or two and sideways to up. Last day of the month, though, and we could get a crazy move. I mean, last 30 minutes. Probably just going to go sideways here. There's that trend line on the 15-minute chart. Testing it, failing at the trend line. It's already 2:37, and typically when you're this late in the day, usually it's better off to just not do anything. I still think we're going up here, but again, I really don't want to be in something when there's only 6 bars left in the day, 7 bars left in the day. It's just really typically after 2:30, somewhere between 2:15 and 2:30. If the market's going sideways, usually it's just better just to let it be. So what was the warning here of all the sideways to down price action? This blue line right here, possible negative gap. And whenever you get that, it increases the risk of more sideways. I'm going to open the question box. And you always have to be a little, again, late in the day, big surprise sell-off. And you have to wonder, is this the start of the bulls giving up and a sell-off? That could certainly happen. So give up late in the day. It's probably more exhaustion and probably just going to go sideways. Certainly wouldn't do anything 7 to 8 too late in the day. We sold off here and we just kept channeling down. And these 2 blue lines are important. These are measuring gaps here and here, and it increases the chances that the market was going to go lower. Let me do one thing. So overall, 60-minute chart selling off, probably going to be a failed breakout and probably going sideways here. I still think the market's going to fail on the daily chart. And now we're going to say, I think we're going back to the June low area. But so far, good day for the bears. I'll talk about the daily, weekly, and monthly after. So we had a parabolic wedge, or you can just call it a wedge top, 1, 2, 3, strong reversal down and several pushes down, and then a surprise breakout late today. I'm going to do it like this. So first bar of the day, bull bar gapping down. However, bull bar high in the range, tail on top, there's probably more sellers above and buyers below. First bar of the day, you often get, the range is going to double, so dangerous to sell above, dangerous to buy below. Bar 2, very big bull bar, and that's why it's dangerous to buy the first bar. Even buying on the limit, you can get a surprise move that can trap traders. But bulls, the reality is they're probably buying, and they're buying lower, and they're probably going to get out break even, which is what happened on the next bar. Do it like 1 second. Sorry about that. So trying to adjust there we go. So bar 3, outside, almost outside up bar, big down, big up, probably going sideways. Bulls want a higher low. Trading range open. Bar 4, inside bar, triangle. So dangerous to be selling above, dangerous to be buying below. Bar 5, give up bar, bull bar closing on its high. Probably always in long. It's better when you get consecutive bull bars closing on their highs. But it's a micro channel, bull bar closing on its high, and probably good enough for at least second leg. Bar 6, buy the close, but dangerous to buy up here. You're buying at the top of the range, and you might get a 50% pullback. So this is not great follow through, but it's strong enough for at least a second leg. Bar 7, you can call it a low one short. You can call it a failed breakout of the one high, but after bar 5 and bar 6, probably buyers below. Some bulls buying 50%, bears sold this high, scaled and higher, getting out break even. Bar 8, a failed breakout below 6 and 7, still probably going above these highs. Strong enough breakout here, probably going to get a second leg. Bar 9, failed high 1, 3 consecutive bear bars, probably going lower. Excuse me, might go a little bit lower to the 50% level, maybe back to the open of the day, but still probably sideways up. Bar 10, traders sold at 2 close, sold more above 1, getting out break even here. Bar 11, you can call it a second entry buy, high 1 here, high 2 above this bear bar. So, might be an okay buy, but dangerous. Tight channel down, a lot of overlap, may go more sideways. Bar 12, weak entry bar. It's an expanding triangle. 1, 2, 3, 1, 2, 3. A lot of overlap, so it's pretty much trading range. 13, strong bull breakout. Enough of a surprise, probably at least a second leg. It's possible 2 legs up. Leg 1 pullback, leg 2 in the second leg trap. However, 4 bar micro channel, probably buyers below and at least a little bit higher. And 14, bull bar, minimum follow through, but not great follow through. So it's a warning that the market may not go much higher. 15, triggered the low 2 short, low 1, low 2, but probably buyers below after this micro channel. And deep pullback, so bears able to make money, selling, scaling in higher, getting out break even here. 17, the entry bar for the bad, high 2 above 16, and it's a bear bar, so probably not going much higher. 18, inside bar, second entry buy, high 1, high 2. Not ideal to sell above, but not really that great to buy above either. A lot of overlap, probably going sideways. 19, bull breakout, closing above 14. May go a little bit higher, but it's also a testing high of this trading range here. And we might break to the upside. Surprise bar 20, might get a second leg up, but it's a wedge, 1, 2, 3. So if you're buying up here, betting on a test of the open of the week, you have to be quick to make decisions if the follow through is bad. And 21, okay follow through, but you're getting bad follow through after breakout bars. Bull bar closing on its high, bad follow through. Bull bar closing on its high, bad follow through. Another bull bar, but bad follow through. So it might be a wedge. And the reality is the bears that sold here, they're trapped, but they're probably going to be able to avoid a loss, which means we're probably going to come back to here, maybe all the way down to here to let them out. Bear bar 22, but probably buyers below. However, it's a wedge, so we still may get a lower high in the second leg. 23, high 1 buy. The bulls, they want to keep this gap open and get a second leg up to the open of the week. Some bulls disappointed who bought 20. They'll use 21 to get out break even, which is what happened here. 24, second entry short. Reasonable for bulls to exit below. And bears, aggressive bears will sell, but if they need fast follow through. And 25, weak high 2 buy, high 1, high 2. But doji, a lot of overlap, so not an ideal buy above. Give up bar 26, testing the 20 low, testing this breakout point here. Also testing this breakout point here. 27, surprise bar, reversing below mini bars here. Wedge 1, 2, 3, so probably 2 legs down. And it's probably always in short, sell the close, and probably going to the June low, this blue line. Follow through 28, so now 3 consecutive bear bars. Sell the close, sellers above, probably going lower. 29, 50%. We're testing 50% from the open of this bar, close of this bar, testing 50%. Probably we'll get a measured move down to here, measured move based on the high of 26 and the close of 27, going down to here in the open of the day. 30, it's a micro channel since 24, probably sellers above, but the pullback might be deep. It's still leg up in the trading range. This might be a leg down in the trading range. 30, possible final flag, even though it went below this bar over here. So you have to be wondering if we're going to pull back after 31. It's 2 legs down, leg 1, pause, leg 2. 32, bear bar closing on its low, but right at the open of the day, so it might be more buyers down here than sellers. And we got a bull bar, so 3 pushes down, 29, 31, 32, but micro channel, so probably sellers above. And this bar went below 33, which was the minimum. Strong enough breakout, probably going to get a second leg after the first pullback, so pullback, second leg. At the open of the day, aggressive bulls bought it for a scalp and bought this measured move target. Low too short, 36, it's a double top with 34 here and here. Bears want to break out and measured move down to the 2 close, but probably more sideways trading and probably have to get to the June low first. Breaking above the June low, testing the 27 close here, 2 legs up, but strong enough breakout here. Might be sellers above, maybe 50% pullback, maybe at the 36.60 area. It's also a test of the moving average. 39, 3 consecutive bull bars, 5 bar micro channel, but probably sellers above. 40, call it a low 2 short, low 1, low 2, but micro channel might be more buyers below this bar than sellers. Bear bar closing on the flow, 41, and 42, another bear bar, but probably going more sideways here than straight down. And 43, bear bar, closed above its midpoint, testing the low of 32. Some traders sold to close, skipping higher, got out break even here. Others waited, sold more up here, and they're getting out back at the low close here. 44, 4 consecutive bear bars, probably going more sideways, and probably sellers above and buyers below. 45, bear bar closing on the flow, but forcing you to sell right in the middle of the trading range, and not really ideal. 48, 2 legs down, trying to break below 45 and 43 low, and trying to break below the open of the day, but probably going more sideways. 48 tried to break out to the upside, 49 reversed it, so now you have 3 pushes up, 1, 2, 3, 3 pushes down, 1, 2, and 3 right there. Closing on its low, okay, swing short, stop up here, betting on a fast downside breakout. Bears got it on 50, 50, 51, sell the close, probably going to the 2 close at a minimum. And sellers above 52, testing the 2 close, so we may bounce first, and we did, probably sellers above 53, 54, low 1 short, went below 53, which was the minimum at the minimum. So strong enough breakout, probably sellers above, and we'll go below 53. 56, second entry buy, but tight bear channel, so it might be more sellers above. And 57, double top, bears trying to defend this gap here. But if we fall below 57, it would be a bull bar for the second entry, so not ideal. 58, testing the measuring gap here. Probably buyers below, but it's a second entry. So you have to be careful, not ideal to buy below a second entry. 59, bear bar closing below its midpoint. Still probably sideways and probably not going straight down. 60, closed above the midpoint. It's a micro channel, but 3 consecutive bear bars might be more sellers above. And 61, bull bar closing on its high, but forcing traders to buy in the upper portion of this range and after a micro channel. So not a great place to buy. Also forcing you to buy just under the moving average, so not ideal. Didn't trigger. 62, trying to break below 61 and 60, but probably buyers down here. And 63, testing the low of yesterday's 59, breaking below bar 2. Probably buyers below, but you're falling below a trading range, and you could go further down than you think and still fail. So if you're buying, you really need a wide stop. What's wide? Probably somewhere down here at a minimum, and you really need to be able to scale in, because that's why it went all the way down even to here. So 5 points even wouldn't be enough. So bulls buying, scaling in lower, closed above the breakout point 58 and the 63 low. Probably going to pull back and go back into this range, but with this measuring gap, that's got to be a warning. 65 low one short, probably buyers below, and 66 testing 64. Surprise bar on 67. Tail on top testing the moving average, so could just be big down, big up, and go sideways. Probably at least a second leg up, but tight bear channel. And you have to wonder why this bar didn't close above these measuring gaps here. 68, it's a low one short. It's an okay swing short, but not ideal after this big bull bar. Might be more buyers below, but the buyers may not come in until a new low of the day. And some traders bought 67, disappointed on 6. They bought 67, disappointed 68, getting out break even. 70, failed breakout below 66, 3 pushes down. 1, 2, 3, probably going more sideways to up here. And 71, bears, they sold 69, disappointed 70, getting out break even, back at the 69 close. Outside up bar, a little bit of a surprise, probably going above here and testing the 67 close. But then we went back, we pretty much went up and closed on its low. So bulls are not able to close this gap. Look at it from a line chart perspective. What do you notice? We have a gap and another gap. So open gap, led to a breakout. And probably sideways for the rest of the day. And then we got a surprise breakout, surprise follow through. And that's pretty common. At the end of the week, end of the month, you can get a surprise bar very late in the day. And when you keep failing above the moving average here, and you form negative gaps, you have to wonder if the market's going to need to break to the downside. And sideways into the close. So forward stop entries, some traders, maybe they buy above 5, but really better to buy a pullback, maybe buy above 11, second entry buy, stop below 10. And other than that, 19, but kind of aggressive, breakout above the trading range, betting on another push up. It's reasonable sell below 24, but it's low probability. And some traders would sell below 26, betting on the give up bar. Others sell below 27. And you can take the short below 41. Not ideal. Not really ideal to buy above this bar either. And then other than that, selling below 41. Some traders buy above 56, but when it doesn't break above the moving average and stalls, they get out. Some traders sell below 58, 59, betting on a measuring gap and measuring it down. And this is really a mess. Not an easy sell below after this bar, not an easy buy after these bars down. And I really wouldn't do anything over here. It's really a limit order market and fairly difficult to trade. For limit orders, first limit order, buying the 6 low or buying the breakout point down here or the 50% pullback here. They're pretty hard to do. You can buy the 14 low. And what else? You can buy above 33, but fairly challenging. The pullback could be deeper than you want, and you have to be quick to make decisions. Probably sellers above 43 after this micro channel. Sellers above 52, sellers above 53. And probably different limit orders. I mean, any of this is limit orders. Traders buying below, selling above bars, buying in the bottom third, buying below bars, selling above bars. But you have to be really quick to make decisions. And I don't think most people can do that fast enough. Because what do you do if you're buying with limit orders? What do you do when you see this? You've got to be very quick to get out. Buy the close, probably bar 5 and bar 13. It's probably by the close 20, but it's a wedge, 3 pushes, so it might go more sideways. Down, sell the close, maybe 26, definitely sell the close, 27, 28, 29, and sell the close 50, 51, 52. I wouldn't sell any of these closes late in the day at the low of the range yesterday. I would just let that go, and I would definitely let this go. Way too much risk of a sharp reversal. So I'm going to take a look at questions now. So bar 74 to 76 was final flag, followed by exhaustion. Am I correct? Yeah. So any one of these can be a final flag, and you can often get a violent move. That's kind of similar to the euro dollar. I haven't looked at it at least since this morning, but let me see if this will load. Yeah, so this is kind of the same thing for the euro. Possible final flag here, bear breakout, then maybe this is the final flag, bear breakout. Now I think this whole box is the final flag. Bear breakout, kind of violent, and then sharp reversal up. So possible final flag, triangle, and sharp reversal down, and now it's reversing up. And if you think about why that happens, it exhausts the move. If you're short and you held through this, what are you going to do when the market just crashes at the end of the day and gives you a windfall profit? You're going to take it. And if you're a bear, if you're a bull, you're going to be glad to buy because it's probably more likely exhaustion. Why do we get crazy moves at the end of the week and month? Are institutions taking profits? Is bar 8? So first off, yeah, that's part of it. I would keep it more simple and think about the market's fractal. So if you look at a 1-minute chart, you'll often hear Al say that it's really difficult to trade because the 1-minute chart can drastically change in the final 10 seconds of the bar. Well, on a 5-minute chart, the bar can drastically change in the final 60 seconds of the bar or 30 seconds in the bar. Well, on a daily chart or a weekly chart, you know that on Fridays, there's typically fast moves at the end of the week. And the reason is it's the final, it's the close of the week. It's the final, couple bars left in the week. If we look at, this happened once or twice. So look right here. These red boxes are the close of 60-minute bars. So we have a rally from 12 to 20. So far, on the open to 13, close of 20, that is a good-looking 60-minute bar. But then in 4 bars, we reversed a significant portion and put a big tail. If you look at this bar, 67 looked like a good bar for most of the bar. And then in the final, maybe 40 seconds, 50 seconds, it sold off and closed down here. So that's probably the reason. And I wouldn't think too far with it. I mean, of course, institutions are fighting over the monthly chart, the weekly chart. The bears, they were doing their best. Let me talk about the monthly chart real quick. The bears have a decent close now below the June low. So instead of closing above it, we're closing pretty far below it. So that is good for the bears. Delaying exit, so someone asked, delaying exit longs after seeing 26 and 27. 26 and 27 could be justified by seeing just a backing test of the 6 high and the bull trend on the left. I'm not exactly sure what you're asking, but I think you're asking, is 26 and 27 a vacuum test of the 6 high? Sure, it is a vacuum test, but the problem is it's so fast that it increased the risk that we're going to have to go lower and maybe to the open of the day. So maybe clarify your question and I'll answer it. Yes, Al would exit immediately. 126 and 27. Is bar 11 a high 1? I'd call it more of a high 2. So high 1 above 8. Then we went lower, and then high 2 above 10 or above 11. A lot of traders would rather buy above 11. At least it's a bull bar, but it's a tight trading range, so not ideal. And I'll give questions just a few more minutes. Yeah, when you see, if you see 26 and 27, you just exit the market. You don't wait. When your premise is clearly wrong, you get out. If that's your question. So please explain negative gaps. Is it the so-called FBG? I'm not sure what FBG means, but a negative gap it's just a gap on a line chart. So you can see here's the euro dollar, and there's a lot of negative gaps, this low and this high. And if we put a line chart on them, they're very clear. So here's a gap. This is, this gap closed. This one stayed open. This one clearly stayed open. This one closed. So maybe, maybe a measuring gap, which we pretty much tested. The next measuring gap target would be somewhere down there, but probably not going down there. So all it is just a gap on a line chart. And since line charts are traded by, computers, if you think about it, a chart is just made up of data points, a series of data points. So an algorithm is just going to read it like a spreadsheet. And at least that's the way I would imagine it. And a chart could be comprised of closes, the open, the low, the high, or everything in between. So a line chart is just simply the close of bars, and most traders, or at least institutions, would care more about the closing price than what happened in between. So I hope that answers your question. All right, looks like that is it for the questions. It's the end of the month, so I'm sure they'll have the webinar portion or the sign-up sheet for the October webinar over the weekend, as well as the schedule. Hope everyone has a good weekend.